JJ, the CPA here. Hope you're doing well. So today is a free follow-up update to a seminar that I did on December 28th. So the only thing that I'm including in this seminar today as a courtesy, as a free update, if you will, are the things that came into play since the seminar that I held on the 28th. Now that seminar, I believe I presented for about 2.5 hours. I answered Q&A for 4 hours. I also had a number of seminars in the first week of January. But what we're going to cover today is going into the employee retention credit. We're going to talk about the EIP, but we're going to also be talking a lot about PPP second round, first draw, second draw, as well as the PPP forgiveness. And I'm very pleased, other than one area, we really have everything that we're going to have. We have our full set of tools other than one thing, and that's just the IRS updating the employee retention tax credit webpage. And you all have access, and I am going to provide free access to this page. Now know this, those of you that attended on the 28th, on this page right now is a link to that video. I am taking that down before I make this public. So for those of you that attended on the 28th, if you don't already have that link to go back and watch that video, let us know, but we're not going to let anybody have access to that seminar, which is what you paid for. So what we're going to be talking about today is effective as of today, the 24th of 2021. And of course, things change tons. And so I really want to make it clear that this is all as of the 24th. We know the SBA has lots of updates. They usually used to put those out on Friday afternoon. It seems they are liking to do that now Wednesdays about 11:30 p.m. I did want to mention to you, I do have 4 other seminars that you can catch at my seminar page. They're videos. One is a condensed version of PPP2, PPP forgiveness, and the tax credits expanded to include the sick leave and family leave. The difference with that is that that does include calculations, worksheets, and the Excel. All of you were able to get that on the 28th, but doing these other seminars for those that did not attend on the 28th, that is also included. And I've got 2 that directly go about PPP2 and how to apply. And so a little background on me. Well, you already know it, so let's just skip past that. Disclaimer of the obvious, which is we're going to be basing this on what we know, what I know, and you would definitely want to work with your professionals as it relates to this. I tried really hard to, first of all, I took out of this slide PDF of the PowerPoint the slides that there were no updates. So you're not going to see anything related to sick leave or the family paid leave, tax credits. I completely overhauled the employee retention tax credit section. And then as it relates to PPP second round and PPP forgiveness, there's a couple of slides that were included the last time, and I've done some minor updates to those. But then most of the slides we're going to see related to that is a real breakdown, and I'm hoping that this will be helpful. I do want to make sure everybody's on the same page that when we are looking at LLCs, in the eyes of the IRS and the SBA, that is irrelevant. When you look at anything related to SBA, PPP, the forgiveness, getting the actual loan, as well as EIDL or grants or anything related to the IRS, these tax credits that we're talking about. An LLC is your legal designation. That's it. An LLC would simply be the answer to my question of what state are you from? And if you said you were from the United States, that really wouldn't tell me, obviously, what state you're from. What you need to know is how you are taxed. You need to look at your tax return. And that is then the rules that you're going to follow based on how you're taxed. The other thing is, when it comes to being self-employed, the only classification of self-employed with the SBA as well as the IRS, is those that file Schedule C or Schedule F. You are not self-employed if you own a S Corp or if you own a C Corp or you own a partnership. It may feel like you're self-employed because you're quote unquote employing yourself, but there's definitely vast rules. I mean, including, like I did last time, the Consolidated Appropriations Act is 5,593 pages. On the website down at the bottom, you have a link to this act as well as a full text to the CARES Act and a full text to the Family First Coronavirus Response Act. And anytime I'm doing research, I'm looking at the law. And when you're looking at the law, before anybody comes out with their interpretations to then go back and double check your understanding, if you were to take a look at that, you can see that it is cumbersome. Nothing new here than before, but I did just, in essence, go through the PDF, and this is the page numbers of the PDF, not the page numbers printed on the form, but the page numbers of the PDF. And so you want to look back and read anything for yourself on how this comes into play. You will, in essence, go to that page, especially when we start talking about the ERTC. So I've gone back to that many, many times. And then all I'm going to note here is very clearly update since the original seminar. We've discussed several aspects of the Employee Retention Credit and retroactively taking advantage of it from the Stimulus Act. There is no doubt that it is retroactive back to wages that are paid March 13th and after through the end of the year, now through June 30. And PPP no longer affects the eligibility to take ERTC, and that's retroactive. However, what's not retroactive is the calculation. So we will look at the calculation on 2020 the same. I'll also note to say that on the IRS website, all the rules and regulations that we see, we're not waiting for the IRS to update that to know how we calculate it for 2020, and really not even for 2021, as we know that for 2020, it's 50% of qualified wages up to $10,000, and that's on an annual basis. So that would be the qualified wages from March 13th through the end of the year. We also know that there's a 50% drop in gross receipts, being a second way that you're able to qualify for the Employee Retention Tax Credit. In 2021, the calculation simply changes to 70% of qualified wages, and that $10,000 of qualified wages is by quarter. So it could be that somebody has an employee that qualifies and they achieve a $7,000 tax credit in first quarter 2021 and a $7,000 tax credit in 2021 for second quarter, that is. And then the drop, the second way to qualify for the Employee Retention Tax Credit, is a drop in gross receipts, but to the tune of 20%. I really wanted to mention that because we are going to have a section talking about the Employee Retention Tax Credit near the end. This is going to be broken out now until Paycheck Protection Program. We're going to talk about the second round. We're going to talk about first draw. We're going to talk about second draw, as well as PPP forgiveness, the new forms that we have now that we did not have on the 28th. Then I only have 3 slides, just rough, talking about the economic impact payment, which is otherwise known as the stimulus checks. And really what I'm going to show you there is how you ensure that you get the full amount on your tax return. And then I'm going to hit the employee retention tax credits. And then the SBA put out a just phenomenal, it's their own PDF, but it's in PDF, or it's their own PowerPoint that they put in PDF form. And so there's no reason to regurgitate it. And you have a link to that. So on the website, you have a link to really all the major aspects of what we're getting ready to go through on all of that. So that's how we will run today's seminar in that order. So if you are watching back and you're wanting to skip to it, well, I tried very hard in my slides to let you know where we are in all of this. So the one thing that is just great, I think, is that the SBA soon after the first of the year, maybe a week into it, basically kind of reorganized their website for PPP, and it's sba.gov/PPP. And they've really broken it out into the major sectors, which I'll be honest with you, it really immediately helped me understand the difference between first draw and second draw. So as we're walking through today, I'm going to show you where you can go to find these things. But if you are wanting any real information, your bank's telling you something that maybe doesn't make sense, or you've heard something, and to be honest with you, I'm not perfect. Maybe I said something. I've been known in videos to say the exact opposite of what I meant. But nonetheless, this is really going to be your best resource, is this page here. So as you can see, they've got some memos on the first draw, the second draw, and then they have a complete section on first draw, second draw, as well as the PPP forgiveness. This is information for lenders, and then if you're interested in any of the data, of course, you can pull that. So really what you'll see throughout the slides, different than last time, we've been referring to this as PPP 2.0. And I think what's more accurate is to say PPP second round. And I've even gone to talking about PPP in 2020 and PPP in 2021. So PPP in 2021 is the second round. And there's first draw and there's second draw. The one thing that you would want to know is that if you have not applied for PPP before, or I should say you didn't get PPP before, you cannot get PPP second draw. You would have to go and apply for PPP first draw. And there was confusion at the beginning. I know I went live maybe a week and a half ago, and somebody had said, hey, my banker said that if I hadn't applied for PPP, that I can't apply for PPP second draw. And I was even in the seminar or in the live going, no. That is not true. If you didn't apply for PPP before, you now can apply for PPP second round. Well, if you're seeing, we got to really break down the terminology. So I want to break that down again right now for you, is that we're dealing with PPP second round. There's a first draw and a second draw. So while technically, yes, when a banqueter say, and I think it really, confused the person who asked the question, and quite frankly, it confused me because I didn't give the answer I thought I was being asked. But when the bank says, if you didn't get PPP before, you can't apply for PPP second draw, that's correct. That's technically correct. But what I think that viewer subscriber was asking, or was left with the impression, was that they didn't get to do anything with PPP if they hadn't applied before. And that's not the case. And that's what I had meant with my answer. And so with this, if you haven't applied before, you get to now apply. And there have been some changes, most notably, and remember what I'm highlighting is different from what I originally presented. And so when we were looking at the law, which is all we had to go by when I visited with you on the 28th, and quite frankly, I had to search high and low, and I had the worst copy of it. I'm just giving you an excuse that I was putting together some information based on the like right on the cusp of that law becoming law. So the big update here that I want you to note is that when you're going for first draw, and it's directly in the instructions, which quite frankly, I was on a show this morning and someone had asked, hey, do you get it based on 19 or 20? And I said, well, I haven't seen anything saying that it's 19 or 20. So I'm going back through preparing for you all today. Probably put about 3 hours into preparing this update. And I was like, it like slapped me in the middle of the head. And I was like, well, that's awesome. And so nonetheless, when you're going for first draw, you're able to include the higher of your calculation, whether it's 19 or 20. First draw does not have a requirement for you to have a reduction in your gross receipts. And first draw now does include the higher NAI CS code 72 to use a factor of 3.5. The first draw is still 500 or less employees. The application, quite frankly, does confuse me a little bit, because with the first draw updated application, there's a section that says 500 or less employees, and then in parentheses it says or 300 or less employees, depending on. So there might be some kind of weird situation there that I'm not capturing. And, really in the last, I guess at this point, it would be the last week and a half or so. Yeah, last week and a half, we've gotten the updated guidelines for first draw, for second draw from the PPP. I believe one was over 40 pages, the other was over 60 pages. Something came out earlier this week, and it's been cumbersome. Is my point. There's a lot of information out there, so I feel like I'm hitting the highlights today and trying to make sure that this is definitely something that you'll be able to take away. And if you haven't applied yet, or if you're helping people apply, that this will be hopefully very useful to you. If you'll note, though, both are 60% for payroll still. You have 8 or 24 weeks. And actually, if you read the provisions when we're talking about the second draw and you read it carefully, it almost sounds like, now I don't want you to rely on this, okay, but it almost sounds like you can almost pick your own covered period between 8 and 24 weeks. And the reason that may be the case is that we know back with the 2020 PPP that when you handed in your application, it ended your covered period. And the only reason I say that is that there was an example in one of the things that the PPP put out there that indicated if you're using an 8-week or a 10-week or a 24-week. So nonetheless, really what this comes down to is that you're using this for payroll within 24 weeks. There's 1% interest. You get 5 years to pay it back on anything that's not forgiven. And then we are in a situation where the interest is not compounded. Now I'm seeing that I just inadvertently didn't unhighlight ENCES, and so that is no difference from the one before. Now on the website, as I had indicated to you, this is sba.gov/PPP. Takes you right into this wonderful portal that we had talked about. So let's hit the first draw first. Okay, so when we're talking about the first draw, when you click on that, what comes up is a very nice set of documents to go and look at. And the first thing is, if you look at this top line overview of PPP first draw loans, this is what pops up. And in my opinion, it's kind of a nice summary of kind of who's going to be able to apply for this. There's also frequently asked questions for lenders and borrowers related to the first draw, and so that's definitely when you get into one of those quirky questions, this is where you want to go. Also, how to calculate the first draw loan amount and what documentation to provide to the bank. And as you can note, this is all new information, especially on that 117. And the reason I say this is that when you're hearing something from the bank, well, you can pop over to sba.gov/PPP. And if you're in the first draw, you can go right to that and get an answer. And most of the time, the banks, they're learning this too. And so nothing wrong with saying, well, I went back to this. There's also a PPP myth versus fact, which actually, when you click on that, it's a little bit humorous, actually. But one of the things to note when we're talking about first draw, it says who can apply. So it has 500 or fewer employees. The other aspect is that there is an opportunity to reapply and get a loan increase. Well, why would somebody do that? Well, it could be that you have a scenario where somebody doesn't qualify for PPP second draw because they don't have the 25% decrease in gross receipts. So that person may then look back and go, well, can I reapply? Well, the only way you're going to reapply or get any additional dollars is if you didn't include covered expenses for payroll the first time around. So there are those that we've come across that they're filing a Schedule C and they didn't know they could include their employees, or vice versa, or Schedule F. They've made some huge changes on that, which we're going to talk about. And also for many that filed partnership PPP, they didn't know they could include the partners because no one knew they could include it until about the 14th of April. So that would be something to look at. The other is there might be let's say in one of those circumstances, you're looking at, well, would it be better to reapply for PPP first draw, assuming that you're in a circumstance that you didn't get already the maximum, or would you want to do a or do your second draw? So it's got to be the rarest of circumstances where you would qualify for the second draw, in the sense that you have a reduction in your gross receipts of 25% or more compared to 2020 and 19. But there could be that scenario. But what we do know is it's not just going back and asking for more. Now, this is only open until March 31st, first draw and second draw. What's key here is, and honestly, I wasn't able to relocate it in all of the pages that we have. But I do know that I read that, and I'm saying I read it in the SBA interim final rules, that there is a 90-day difference of time before you can apply for draw 2. So somebody who's reapplying or is now getting first draw, whether it's a reapply or it's their first draw, there has to be a 90-day period between first draw and second draw. Now, I don't know if it's 90 days between the end of the covered period or from when they filed for it, but it's irrelevant in this moment in time, because basically we know PPP opened up for first draw with the small, mostly nonprofit banks on Monday, January 11th. Well, there's not even 90 days between that date and March 31st. So I don't think we need to spend a lot of time. How do I get first and second draw? Because I know there's going to be a 90-day in between. And then the other aspect is that we know that the self-employed are still included. So when we look at first draw, it's Form 2483. And this was, in essence, released. And I know there was some confusion, but on the 31st of December, and it might have been on January 1st, I did a video saying, hey, the first or the new 2483 is out, in essence, for the second round. And the confusion behind that was that, yes, it wasn't the Form 2483 second draw, but it was the updated, and then they updated it again on January 8th as it relates to this. And so if you look at those carefully, that was my intention. And then later, when they came out with the 2483 SD, then I went back to those videos and updated it to go to the link of the 2483 SD. But really, we did not know there was going to be potentially a second application. But what we need to know is that there is a second application. So this is distinctly for first draw. You're going to find this when you go into that portal section of the website with PPP. So when you look at this and you then compare it to the prior 2483, basically we've got the aspect here talking about the employees. And then also you'll note that on the EIDL, it indicates to not include any EIDL advance, where originally you would include that. Also, the purpose has been expanded, which I talked about on the 28th, some expansion of what PPP can be used for. Now, what's awesome as well is that on these applications, not only 2483, the application for first draw, but also on 2483 SD, which we're going to talk about, that's for second draw, as well as the updated Form 3508S, which we're going to look at as well. There are further instructions and information directly on the application, which I think makes it very concise, and it's, in my opinion, beautiful. And I think that that'll be definitely our first line of defense. But here is the key, and this is where it, if you've been around as long as I have, this is where I had a V8 moment, boom, should have had a V8. But with the first draw, it is the average of your 2019 or your 2020. This is right in the instructions, bigger than Texas, I'm embarrassed to say. But nonetheless, I'm just human. But with that being said, we also know that It identifies how it works for seasonal employees and seasonal businesses, that is. So with seasonal businesses, and I got asked this question on the show with Josh Jelinski this morning on his channel, but I do know that you take the average for a very short period of time, 12 weeks of your busier time to come up with your average. It also backs up that it's still going to be nothing over 100,000. It addresses here for new businesses, for farmers and ranchers, eligible payroll costs, plus the lesser of 100,000 and the difference of gross income and any eligible payroll costs for employees as reported on Schedule F. Let me take a second on that one. So for Schedule F, it can be either or, okay? It can be line 34, which if those that applied for PPP first time in 2020, it was based on line 34. What this is indicating is that for farmers and ranchers, those that are filing Schedule F, that's for those that are self-employed, not land rental that's potentially reported on Schedule F. This would be the self-employment earnings. But basically, it's indicating here that you can use the net, or you can take the amount of wages, that would be W-2 wages, that the farmer pays, right? Get to include that. Plus, you get to include, and it says right here, plus the lesser of 100,000 and the difference between the gross income and any eligible payroll costs for employees as reported on Schedule F. We're reading that correctly. So I took I was at a town hall by the American Institute of CPAs, and they were the ones that clued me into this. First of all, like within 24 hours of the last interim final rules that came out, that in essence, Schedule F is now based on your gross minus any payroll costs. If somebody doesn't have payroll costs, then it's going to be based on their gross. We know on Schedule C, it is still based on the net income, which is line 31. We know for partnerships, and this didn't really, in my opinion, get very well clarified till we got into the summer. I know that they clarified it some in April, but for partnerships, it's the net earnings from self-employed earnings, which is on Schedule K1. It is box 14A, and it is that amount minus Section 179, which is box 12, multiplied by 92.35%, not more than $100,000. And what I like about this is that at least compared to October 15th's FAQs, this makes it more clear, at least to me, that it's box 14A of a Schedule K1 for a partnership minus box 12, which is Section 179. Then you multiply it by 92.35%. And then whatever that figure is, well, it can't exceed $100,000. Now, I am going to go back through this. I'm just showing you directly on page 3 of Form 2483. We're seeing a beautiful summary right here that many of us agonized and went throughout all of the months. I know I've had many discussions with Rob, as well as CK, the CPA, and Chris G, the CPA, going through these things. I know Richard Q has also inquired a number of times, but the biggest thing is the or. For first draw, it's 19 or 20, and you get to include the higher of. So on the Paycheck Protection Program, if we go back to that main page, sba.gov/PPP, and we look now at the second draw. So we do know second draw means that somebody got PPP in 2020. Now, it doesn't matter if they got forgiven or not to apply for the second draw. I don't have it in this seminar, but it is very clear throughout the SBA documents that you do not have to file for forgiveness. The interim final rules that came out about a week and a half ago, the SBA made it crystal clear that lenders cannot require the borrower that's going for second draw to apply for forgiveness or provide anything related to forgiveness, because on the application of the 2483 SD, you indicate that you have used or will use all of PPP that you got in 2020. And so I do know there are banks that are requiring that. And I know that banks hold all the cards. I know, though, that, and we're going to talk about it when we get to the employee retention tax credit, I'm not letting my clients still apply for PPP forgiveness. Round one, first draw 2020 at this point is all simultaneous in my mind, because we need to know when we apply for forgiveness, how do we ensure that we've elected the wages out of the PPP forgiveness wages. Now, I'll tell you this, and I've got a separate video that's going to be coming out on this, so I've not included in this seminar. But when you look at the minutia of the PPP forgiveness application, and you look at a footnote, like this little tiny footnote, like 8 font, it gives us a glimpse. And I think the glimpse is if you have filed Form 7200, if you have filed 941X or 941, that is really you making the election. You do not plan to use those. You do not plan to use that wages in your PPP forgiveness. Now, I'm getting ahead of myself, but what I want to make clear here is that you do not need to file for forgiveness. You should not file for forgiveness. You should tell your bank if they're going to hold you or your client hostage, if you will, and not allow them to apply. You would need to tell them with like need to be stern about it and concrete that they cannot submit that to the SBA until we have guidance, which I'm assuming is going to be any day, from the SBA on how do we, quote unquote, elect those wages out specifically from PPP forgiveness. Now, right now, if we include it in the ERTC, it seems like that's a pretty good indicator that you're not including it. If you apply for forgiveness for PPP and you don't include those wages, well, you form over substance, or substance over form, I should say. Well, you're clearly not including those wages in PPP forgiveness. But as we understand it, there has to be an election. What is the election? We don't know yet. It can be based on what I just indicated, but this is the part where I've gone toe to toe with 3 different banks. And I said, we're not going to submit any PPP forgiveness applications. And I'll just take my client to another bank that in 3 seconds will do their PPP 2.0 and pick up their fee if you're going to require it, because it's not required. And that's just because I want to ensure that when my clients apply for PPP forgiveness, that they're going to achieve it and we don't have a hiccup later. Now, for the Paycheck Protection second draw that came out on the 8th, there is a landing page for that. There's a top line overview of the second draw, and then there are how to calculate the revenue reduction and maximum loan amounts, including the documentation to provide pretty much on the backside. As you can see, a lot of this has just come out. That is on the 19th. So it's 5 days ago. So when we're talking about second draw, who can qualify? Well, it's previously received the PPP and will or have used all of it for authorized purposes, has no more than 300 employees and can demonstrate at least a 25% reduction in gross receipts between comparable quarters in 19 and 20. And excuse me, on this is that top line memo that talks about who qualifies. The main thing is that 25% reduction, and that is not a part of getting first draw, even though we're in second round. So what is in essence very clear for second draw is that they have received the first draw, no more than 300 employees, and they have that reduction. Also, the NAICS 72 leads to the 3.5. Now, here is the second draw application, and it is similar, obviously, to Form 2483, which is the first draw application. Of course, what we have here is a very clear indicator that it's the second draw. The other part is that you will indicate the reduction in gross receipts of at least 25%. Now, on this, it's for applicants for loans of 150,000 or less that can leave it blank. Now, I will tell you this, for every single one of our clients, I mean, we already went through the exercise of figuring out, do they qualify for second draw? We already know what the number is, and we already have the quarterly financials. So we voluntarily gave that to the bank upfront because it will be required at the time of forgiveness. So why not, while it's handy, go ahead and put that information in so that you already know, you as the borrower or you for your client doing the work and the effort now, you're able to indicate that. So even though it's not required to state it, we are. We also know that on this, we have the 0.25 or the 0.35 for the calculation, and we know that it cannot exceed 300. So this is again for the second draw loans. Now on page 4 of the 2483 SD, okay, it's for the second draw. So this is on page 4. We're going to break this down, but I want you to note that on this form 2483, we have much more information. As you know, when we were in 2020 getting PPP or PPP forgiveness, there was not as much information, details, instructions on the application forms. They did start to come on there, but we had to refer to FAQs, also the guidelines, another set of FAQs, as well as then interim final rules. And you had to kind of piece it all together, if you will. I really feel like the way that they have organized that website, it definitely helps. The way that they've organized the information, as you can tell, they've put more information here on the actual amount. So again, we're talking about the second draw. Again, it's 19 or 20. So this is the same language that we see in the first draw. So everything else in this section, in essence, is going to be the same as what we saw before. There's not a change of what gets to be included in determining the payroll costs for first draw or second draw. There's a difference in what the money can be used for in terms of it being expanded here now in second round, right? We have that terminology. Second round is not the same thing as second draw. We have second round, otherwise known as 2020 PPP. And in second round, there's first draw and there's second draw. But we are seeing that there's an expansion of what can be used with the PPP in terms of covered expenses to achieve forgiveness. But the expenses that are going into the payroll costs have remained the same as 2020, and they're the same for first draw or second draw. Now, when we're talking about this on the form 2483 SD, this gives a breakdown of the 25% reduction in gross receipts. For loans that are above 150,000, they have to report it then. But what is also clear here is that you have to substantiate that no matter what at the end. Now, right here on the application, I've had a number of individuals that have asked, well, what if I've not been in business for all of 2019? So check this out. Very, very clearly indicates how you go about that. It also talks about here at the bottom that gross receipts include all revenue in whatever form received or accrued in accordance with the entity's accounting method from whatever source, including from the sales of products or services, interest, dividends, rent, royalties, fees, and commissions reduced by returns and allowances. Generally, receipts are considered total income, or in the case of a sole proprietor, gross income plus the cost of goods sold, and excludes net capital gains or losses as those terms are defined and reported by the IRS tax return. So know this. So this gets a little bit more, and I think we have to be really cautious about cost of goods sold. We got to be really cautious on what it is that we're reducing down, because we all know that many of us may come up with a method on our financials of what we're including in cost of goods sold. I have clients that are dentists, and we have a cost of goods sold. There's not really a cost of goods sold. Traditionally, cost of goods sold would be for product. But when I'm doing financials for my clients, we want to see, well, how much went to lab fees and dental supplies? Just giving you a hypothetical. We also want to see, well, how much went to the credit card fees? Typically, these are not items that are in cost of goods sold, and these are not items on a tax return we report as cost of goods sold. So this is not an opportunity to find a whole new way of doing accounting or a whole new way to report something on a tax return. In essence, what's really coming down to is how have you been reporting this on it? Now, gross receipts, and I am reading this bottom section because it's very technical. Gross receipts do not include the following: taxes collected for and remitted to a tax authority if included in gross or total income. We know we have a lot of clients that is included in their gross receipts. Also, it indicates, let's see, remitted, such as sales or other taxes collected from customers or excluding taxes levied on the concern or its employees. Proceeds from transactions between a concern and a domestic or foreign affiliate, so basically talking intercompany, and amounts collected from another by a travel agent or real estate agent, advertising agent, conference management service provider, freight forwarder, or customs broker. What are we talking about there? These are businesses that receive funds in essence on behalf of their customer, or what they're collecting from their customer is not only their fee, but then to, in essence, work as a conduit. And if that's the case, then you're able to work it through. Now, if we're getting ingenuitive or we're using some I don't know, if we're getting creative with that, how about that? If we're getting creative with that, I don't know that this is really the area to get creative, because it does need to be how you're reporting it on the tax return. Now, for those of you that prepare taxes on a regular basis, when you start looking at the minutia, okay, when you see interest, dividends, rents, royalties, fees, and commissions, right? I want you to think, and this is going to throw everybody off because I'm now paralleling. Anybody that doesn't understand 163J should ignore the next 2 minutes, because this has nothing to do with PPP. This is only directed at those that regularly deal with taxes. But on 163J, which is about how much of the interest can be deducted on those businesses that are above $26 million. Again, nothing to do with PPP. But when you look at that aspect of the law, which is for tax purposes, you look that the only interest, dividends, rent, royalties, and fees, if you will, that get included are those that are the business of the business. So when we're looking at the minutia, in my opinion here, and when I interpret what I've read from the SBA, this isn't just interest income. This would be if the business is in the business of making loans and it collects interest as its business revenue, then it would be included. That is my opinion based on what I've looked at. So I don't have any clients that on page 1 are showing interest and dividends and or rents or royalties. Those are going on other parts of the return that has no bearing. And therefore, if it's not part of the gross receipts, it's not part of the business, I'm going with my interpretation of how it works for 163J. Let me be clear. I'm now not talking about just in that last minute. That has nothing to do with PPP directly. 163J, if you don't know what that means, completely ignore that section. But I wanted to clarify for those that are doing this on behalf of their clients. Now, I'm going to continue to read. It says all other items such as subcontract costs, reimbursement for purchases a contractor makes at a client's request, investment income, employee-based costs such as payroll taxes, may not be excluded from gross receipts. That's why we have to be careful with our definition of what is cost of goods sold here. And when you're talking about total income plus cost of goods sold, I think what they're making clear here is that it's not gross profit. We know in the accounting world, we have gross income, we have cost of goods sold, and we have gross profit. They're not talking about gross profit here. So we have to be very mindful of what we're getting to back out of gross receipts. And what I would say it is, if it's not the business of the business, then it's not included in gross receipts. We also can rely on the fact that the SBA has made it clear you do not include in gross receipts your PPP, your EIDL, or your EIDL grant for that matter, right? So you don't include income in your gross receipts that doesn't have anything to do with your business. Now on the payroll costs, this is not new. You'll see that nothing is highlighted here. Basically for an S Corp though, it's going to be the wages up to 100,000. My opinion, what I've used with the banks here in Oklahoma, because we have it now, is a Form W-3. And I'm using basically box 5. It's the Medicare wages. It's the most pure amount. In essence, I've had banks indicate that they're going by the 941s, whatever. Bottom line is that this is what I have viewed as the most pure number because Medicare wages are not affected by the pre-tax deductions that affect box 1. So I do have one bank and they weren't going to bend, whatever. They're the ones that hold all the cards that was going on box 1. And they didn't get as much. And I got done arguing with them and I thought it's not really worth it. At the end of the day, also for the S Corp, you get to include the health insurance paid by the employer, not including the S Corp owner's health insurance, because that should be included in wages. And then for those that are preparing on behalf of your client, this is really in the minutia, but when you read what payroll costs get to be included for PPP, it is only wages subject to withholdings. So if you look at box 1 and you look at a more than 2% shareholder, and in box 1, health insurance has been added, that health insurance is not subject to federal withholding. That health insurance does not get to be included. That's why I go with box 5. Now, there are banks that aren't cluing into that. They're not paying attention to it, whatever. For my clients, we have not included it. So even though this indicates the reason that the health insurance does not get included on an S Corp owner because it is included in wages, well, if you go back to the CARES Act, and I will know this because I put on an hour-and-a-half seminar for a bank here in Oklahoma, and I literally dissected what is the definition of wages, PPP1, and I did it on April 3rd, which if you are seeing, April 3rd is the date that PPP1 came out. So anyways, with that being said, I'm going with box 5. I think it's the most pure number. It's the most fair number. And then of course it includes the employee or the employer paid retirement, including the S Corp owner. For the Schedule C, scratch that. For the C Corp, okay, it's the 100,000 or less in wages, including the 5% or more owner. It does include the health insurance paid by the business on that owner. And the reason why is that those amounts of health insurance are not included in the W-2. And then we have the employer paid contributions. Now, payroll costs for a partnership, what I did highlight is not different than what I presented previously. I expanded on what it was that I indicated in the seminar on December 28th, which was we have a Schedule K1 for the partnership. I clarified by saying it's box 14A. I know I said it verbally, but I didn't have it on the slide. Less section 179, which is box 12. I did say it verbally. It wasn't on the slide. And then no more than 100,000. Remember, I talked earlier that you take 14A minus 12 times 92.35%, and then whatever that figure is, no more than 100,000. It is the employer paid health insurance. If the partnership is paying the health insurance for the partner, that does not get included. And then the employer paid retirement contributions, which is not possible for a partnership to pay that on behalf of a partner because they are not an employee. What I've highlighted here is this is not different than what I presented in terms of the calculation. What I'm indicating here is that we're now clarifying that for second round, first draw, or second draw, okay, now it's just 19 or 20, you get the higher of, and then for the self-employed, second draw or first draw of the second round, it's 19 or 20, the option of the higher. So when calculating the loan, did I get a slide in here twice? Let's see. Let's see. I can't tell if that's slide or just highlighted. Anyways, oh, I added a slide. That's for Schedule C. And then for Schedule F, I added the slide for Schedule F specifically. It's Schedule F line 34 or Schedule F gross receipts less wages, no more than 100,000. And then you do it as 2020 or 2019, whatever's higher. Got a note on both of these, Schedule C and Schedule F, that Schedule E does not qualify because it's not self-employment earnings. Now, for the second draw, when we're talking about second round, second draw, there must be at least a drop in 25%. In this example, it would be second quarter that would have a drop in 2020 of more than or 25% or more. So calculating PPP second round, first draw or second draw for employers, okay? It's 19 or 20. If this is based on wages, there's the gross wages. You got health insurance, except for the S Corp, you'd have retirement plan, you'd have state unemployment tax. So you'd have the annual total payroll. That is the total of above. Less exclusions. So if up above in gross wages were any wages in excess of 100,000, those would be backed out to come to a net annual payroll for PPP 2.0 purposes. And therefore you would take line A minus B to equal C, and then you have your average monthly payroll. So your average monthly payroll, of course, is taking the annual divided by 12, and then we take it by 2.5. So we take the average monthly times 2.5. Of course, we know we get the higher of, and there's also the provision of a code 72 providing the 3.5. So in this example here, 2019 would be the higher amount. So the PPP second round, first draw or second draw is 74,513 in the sense that it's an either or, the higher of. Now, if we are completing the form 2483, right, SD, so we're talking about only the second draw here. There's no reason to go over the application for the first draw because you're just going to include the higher of. This is a little bit different because it's new. We know that what we're dealing with here, and obviously we've got our average monthly payroll of 29,805. Looks like my slide is going backwards for some reason in terms of the numbers. So if we look at what was on our spreadsheet that we just did, we compared 2020 to 2019. We know that second quarter was the lower amount. So in 2020, we put the gross receipts into that figure, and we would put then the 2019 amount in there, the 33,000. And of course, we know it's quarter two. Now, of course, you know that if it's less than 150,000, you don't have to include this. However, with my clients, we simply are. PPP 2.0, you get the average, the higher of. So we know 19 was higher. So the average monthly payroll was 29,805, 2.5 is then that amount. In calculating the first draw or second draw for self-employed, it's 19 or 20, the higher of. We're going to take Schedule C, line 31, divided by 12, and then we're going to take it by 2.5, and then we get the higher of with that 72 providing a 3.5 factor. So again, on the 2483 for the self-employed, I bet I'm going to, okay, go in a better order here. Average monthly, that what we just calculated was that amount. If we take 2.5, we know we've got that amount, and we get the higher of. So we know 2019 is going to be the higher amount. So the average monthly, 8,000, and then we know that's a factor of 20,417. This is for the self-employed here. And then we know that what is put in, and probably really for the self-employed, unless they have employees, they're never going to have more than 150,000. But nonetheless, for our clients, we are still putting this in. We just have it, and we're done. Then we know what it is later. And so you're filling that out. And then if we go to the forgiveness aspect, so back to sba.gov/PPP, we can go into the section for PPP forgiveness. So for first or second round, first or second draw, it is all now the same form. So the stimulus law, the stimulus law, all PPP, whether you got in 2020, whether you got in 2021, whether it's first draw, second draw, PPP forgiveness is not income, zero reduction of tax deductions, zero tax effect, and PPP forgiveness does not get reduced by the EIDL grant. So PPP first round and second round first draw or second draw forgiveness, all treated the same. Okay, so we know what the prior law was as it related to the tax effect. It's now no tax effect. You can deduct the expenses that you paid from PPP, even if forgiven. Now you deduct it in the year that you paid them, not in the year of forgiveness. In my opinion, you're going to deduct the expenses in the year that you paid them. And now I'm gonna go off script a little bit. And here's what we know. The IRS came out, I believe it was on January 6th, and had a IRS notice. Actually, it might have been an IRS revenue ruling 2021-2. And it indicated that the IRS notice in 2020, the IRS revenue ruling in 2020, and the IRS revenue procedure in 2020, there were three of them that all had to do with the tax effect of PPP. It indicated in their 2021 revenue ruling, 2021-2, is that all of that is obsolete, it's canceled, it doesn't have any effect at all. So what I want us to note here is that when we were looking at any of that, okay, when we were looking at those items, even though they're obsolete, okay, as a CPA, 28 years of experience, here's how I'm going to feel comfortable that the adjustment and the deductions need to occur in the year they were paid, not in the year of forgiveness, is that the IRS made it clear to us when there was going to be a tax adjustment, which we know there's no longer a tax adjustment, but when they were making it clear to us that we were going to have to reduce down our expenses, the IRS made it clear they didn't care when we filed for forgiveness. They didn't care when you got forgiveness. What they indicated is you will make an adjustment in 2020, period, the end. So I haven't seen the IRS come out now and say, oh, okay, well, hey, even though we canceled all that stuff, here's what we do want to tell you. It's all got to be accounted for in 2020. So with my clients, without exception, whether they're cash basis or accrual, whether they're fiscal year end or not, when that money was spent is when we're going to deduct it. We're not going to be able to teeter totter, in my opinion, and say, oh, well, we're going to wait till the forgiveness happens before we then decide when to deduct the expenses. So with that being said, we know that we get the benefit of not having to reduce down our deductions, and huge benefit that we get to deduct them. So we know we have now a simplified forgiveness application. It came out just days ago, and it's for loans that are not more than $150,000. So here is our new one. It is still, it says application on it. When you read the law, it indicated it would be a certification. It still says application on there. Potato, doesn't really matter, but this is now for the 150,000, it's form 3508S. I was kind of guessing that might be what it was going to be. I felt like when they did the 50,000 originally, it was kind of a precursory to what the SBA was anticipating, but it's now available. SBA.gov/PPP, and in that section of forgiveness, you will find this. Now, the one thing I started looking for is, well, can it be a combined forgiveness application? And it's not. We will see further in the instructions, but this is used for first draw or second draw. And when you're looking at that, you check one. And so there is the option, there's not the option to combine both loans to have one forgiveness application at this time. What's indicated here is what's the amount of the loan that was spent on payroll costs. And I know some have thought, oh, well, I guess we don't have to worry about rent or utilities or anything to that effect. Well, I don't think that's really the case. I think that the reason that that's being indicated is that whatever amount is going to be indicated here on the requested loan forgiveness amount, well, by golly, that amount times 60% has to be at least what's on the payroll cost item or more. Now, when we're looking at what has to be required with the PPP forgiveness application, we know that there's nothing to provide. We're going to talk about that. I just want to really drive that home. So you apply for draw one separate from draw two. Now let's be clear. They're calling it first draw and second draw. First draw includes 2020. Okay, so if somebody got money in 2020, that's first draw. If they get money in 2021 under first draw, that's first draw. Second draw is they got money in 2021 under second draw, but you're going to apply for those separately. There's a nice memo. They put together a top line memo for the PPP forgiveness as well. And I understand that these are small and we're going to break them apart. But what I want you to note is that when you go to that, it indicates right there that you, the borrower, can apply for forgiveness of your first or second draw using this only if the loan amount you received from the lender was $150,000 or less, first or second draw. One of the things I want us to note is that we are seeing that the SBA is paying attention though on requirements of documentation, looking at both draws. So when we're looking at this, I understand it's small, but the SBA 3508S requires fewer calculations and less documentation. The SBA Form 3508S does not require borrowers to show the calculation used to determine their loan forgiveness. Of course, they can request that information. Now, when we're talking about the Form 3508S, excuse me, we're still talking about not more than 150,000, but look what is on the Form 3508S. Some wonderful additional directions. So when we're talking about the cash compensation, not going to see anything new. When we're talking about here now the employer benefits and the owner compensation, it's all going to mirror what we had done previously in the calculations. What I like about it is that it just has that information right there. The other thing to note is that it does indicate requested loan forgiveness amount. It's not blanket forgiveness. It is not automatic forgiveness at all. It breaks down the non-payroll costs that would go into that. What I've indicated a number of times is that if you're self-employed, you're going to be in a set of circumstances. There's no way the IRS doesn't know what your Schedule C is, right? Line 31, which means there's no way that the SBA doesn't know at some point what your line 31 is. So at some point they're going to know, and they're going to know if your calculation was correct. The other part is that for the self-employed Schedule C filer, or even Schedule F, right? Doesn't matter that it's on the gross, the maximum that gets to be included is 100,000 divided by 12 times 2.5. For the self-employed without employees, the only amount that could show for the requested forgiveness amount is 20,833. So beware to the self-employed to not be tempted or be confused and put an amount that is more than that. So continuing on the Form 3508S, not more than 50,000. So I've really looked at the minutia here. We're going to tear this apart. So you apply for the first draw and the second draw, we know separately, right? But for PPP loans, not more than 50,000, FTEs and salary reductions are not considered. Okay. So when we look at, this is right on the Form 3508S. This is, what is this? This is looks like page 3 of Form 3508S. And there's a section talking about the FTEs, also talking about the borrower responsibilities, and indicating here that they have to still accurately calculate what the forgiveness is. So I have heard many are saying, well, why do I have to worry about the forgiveness? I'm just going to put my loan amount down and I'm done. You still need to go through the calculation. And then also, if the loan forgiveness application is being submitted for a second draw PPP, the borrower must submit or have already submitted all required revenue reduction documentation and have used all of PPP first draw eligible expenses prior to the disbursement of the second draw. which means this: it doesn't matter what the loan amount is, that the gross receipts test will need to be included. So let's look at this section. We're going to look at this a little closer, okay? And so what I've done is I've copied this to the next slide. So on the FTE and wage reduction, this one we have to read very carefully. Now, here's the thing to note, okay? You can just provide the documentation to the bank. The bank may want it, you can provide it. But in essence, this is, I think, more for the banks, you would think, to say, hey, listen, you don't need as much documentation here for the PPP forgiveness of up to $150,000, folks. We know that on the original Form 3508S, which was 50,000 or less, the FTE and the salary reductions did not matter. It was ignored. The FTE and salary wage reductions for 50,000 or less were ignored. So one of the things that I was interested in is, now that the 3508S indicates that it's up to 150,000, well, is that 50,000 still the limit to care about FTEs and salary reductions? Or is it up to 150,000? So my interpretation of this is that FTEs and salary reductions still do not matter up to $50,000. Above $50,000, FTE and salary wage reductions matter, okay? So even though there's a Form 3508S, if we're looking at it as 150,000, there is two levels in determining this aspect. So here we go. I did a lot of underlining here. So borrowers that received a PPP loan of more than 50,000 and borrowers of 50,000 or less. Now, if you just stopped right there, right? Okay, mere mortals stop right here, okay? They stop right here. People that aren't listening to this seminar, didn't come onto this seminar. They would stop right there, like, oh, okay, right here, borrowers of 50,000 or less. Well, it matters. So we got to read carefully here. I'm going to start over. Borrowers that received a PPP loan of more than $50,000. Boom, we know that they got it more, it matters. We know right off the bat. Then it says, and borrowers of 50,000 or less that together, right? How key is this word? That together, okay, with their first draw loans totaling 2 million or more, or second draw loans totaling 2 million or more, okay? Now let's go back and read this, because when I read it, I was like, well, wait a second, you can't even get more than $2 million on the second draw. So why are they even indicating this? Because second draw can't even be more than $2 million. Let me be clear here. There's no real reason to dissect this, in the sense that you're supposed to have the documentation. Your client needs to have the documentation. This is just who has to provide the documentation, right? When we're looking at the 150,000 or less, right? So anybody filing Form 3508S doesn't have to provide documentation, okay? Now we're talking about the FTEs and the salary and wage reduction. Who has to look at that? I'm repeating myself. Those that got less than 50,000, okay, or 50,000 or less, don't need to worry about FTEs and salary wage reductions. Those that got more than 50,000 need to worry about the FTE and wage reductions. So when we read this, it clearly, before the and, okay, borrowers that receive PPP loan of more than 50,000, okay, they are going to have to adjust the requested loan forgiveness amount due to statutory requirements, okay? But then it says, and borrowers of 50,000 or less that together with their affiliates received the first draw totaling 2 million or more, or second draw PPP loans totaling 2 million or more. Now, I wouldn't be surprised if, and I'm having a little fun here, I wouldn't be surprised if most banks go with this. Okay, so if you're more than 50,000, you got to figure it out. And borrowers of 50,000 or less, you got to figure it out. Okay, what did I say earlier? Mere mortals stop there. What we know is that if it's 50,000 or less, that together, which means added to, what they have with their first draw or their second draw totals $2 million, then they need to take a look at that. So again, we still have to come up with the information if requested. I just think my conclusion is 50,000 or less FTEs and salary reductions still don't matter. It's not all of a sudden they don't matter. They didn't matter when 35OS came out, 3508S came out. It said, hey, on this form, 50,000 or less, if you file this, FTE salary reductions doesn't matter. Now that 3508S is up to 150,000, what this is indicating is still 50,000 or less, FTEs and salary reductions don't matter. If it's above 50,000, it does matter. Or if somebody got less than 50,000, but coupled with them getting other PPP, then it matters. Well, how would that even be? How could somebody who got 2 million plus get another loan of 50,000? Well, on the affiliates or on a reapply. So also on the PPP forgiveness simplification, documents that each borrower must maintain but is not required to submit. And as you can see on this page, there's nothing in here about dollar limits. Documents that each borrower must maintain but is not required to submit. My hope is, and you know me, I'm having a little fun, that our bankers will know how to read this. And here's the deal though, and this is where I've kind of resigned myself, is okay, they're going to want it. I don't get it. Why are they wanting this information? It's just more work for everyone to provide it. Nonetheless, there are banks still asking for it, but it is not required to be provided. So simplified form application. Now that we have the simplified application, what about loans that are more than 150,000? Well, when I go and look at those two applications, which you'd find at sba.gov/PPP, and in that portal, we still have the form 3508. We have the form 3508EZ. Both of them have been updated because what I love is the SBA has started putting the update date next to what you're getting ready to click on. And in essence, you would know right off the bat, well, is there anything new there? But when you look at those forms, they've been updated to, in essence, include second draw and use language of first draw and second draw. You still use for first draw, you're going to have an application. For second draw, you're going to have a separate calculation. 3508EZ now is PPP loans over 150,000, under 2 million, still no haircuts. And you don't have to provide on the EZ the same type of documentation as if you're doing the form 3508. But if you're looking at the 3508EZ, I like it because it has the best calculation, if you will, or I should say, it gives the clearest calculation, in my opinion, of what PPP is, very similar to 3508S. Now, it does indicate, if you look at the instructions of the simplified application, the 3508S, it does indicate in there that if there are haircuts, okay, well, then they don't qualify, and they're not going to qualify for the EZ, and they will have to do the form 3508. Now, the other thing to note here is, and I released a video this morning, and it was one of mine that I did later in the evening. And for those of you that have been tuning in to JJ the CPA for a while, you know what happens when I start doing videos later in the evening. I get a little more coach. But with that being said, what I talked about was FTEs. And there are so many safe harbors that the only way a safe harbor doesn't apply to somebody when they're looking at their FTEs if they are a shuckster. A shuckster is somebody that sends everybody on their way and gives themselves fat raises. A shuckster is somebody that puts everybody on unemployment and then hires their family. That's a shuckster that would probably have to worry about FTEs. Or a shuckster was playing all of these games, especially Dak, the prior, because I know that I did a number of videos where I got quite angry at people that were suggesting ways to basically screw the system on this. So if you tried to screw the system, yeah, FTEs probably are going to matter. Who didn't screw the system? Where do the safe harbors come into play? They're not changed with the stimulus, the new stimulus. The safe harbors, right? You don't have the location open. You can't afford them. You don't have that role anymore. Your business isn't doing the same amount of revenue to support those number of employees. The employee left. You fired them for cause. They don't want to come back. They, on and on and on. I mean, typically when you're looking at a small business here and they don't have the same amount of FTEs, there's going to be a good reason for that. And you need to then look at the safe harbors. And I don't know how a safe harbor doesn't cover somebody. Now, on the salary reduction, that aspect of it is while you're spending the PPP, there's a misconception, in my opinion, that this full 24 weeks, you have to maintain the salaries of everybody. Not possible. No way. That's what PPP is saying. Read it, interpret it. It's clear that while the money is being spent, the PPP money, if you have an employee and their salary has been reduced more than 25%, the more than 25% reduces down the PPP forgiveness amount. Now, for those that want to get technical on it, do it. For those that want to get into the minutia, do it. Okay. But in my opinion, I have not come across it yet. So if you have a client or you yourself are in dire straits, you're not doing well, you can't afford it, you couldn't keep all the employees on, PPP was done, it was spent, and you can't keep the employees on. There's no way you're doing a reduction of your PPP forgiveness. You need to dig harder and find the safe harbors, if you will, that apply to you, because it's not meant to be that while you're spending PPP, once you're done spending PPP, that you get penalized for not being able to afford the employees after PPP. And I don't mean 24 weeks. What I'm talking about is, in essence, when you have spent all the money. Now, on the PPP forgiveness application, Form 3508 EZ, they have also expanded it, I believe, to include some additional information. I feel like they expanded a little bit more explanation. Now, of course, they updated this to indicate that for a PPP loan amount that is not more than $150,000, you can check at least one of the boxes. Okay, so your borrower can apply for the forgiveness for first draw or second draw using this SBA if the PPP loan, is more than 150,000, and you can check at least one of those two boxes below. And those are, in essence, the same two boxes. It has been expanded to include first draw and second draw. On the PPP, there's also in the forgiveness, you would want to take a look at this, but there's the PPP interim final rule. And interim final rule honestly means nothing. They update them still all the time. I don't really understand the word final in that. But anyways, loan forgiveness requirements and loan review procedures as amended by the economic aid. And so when you're looking at the portal on sba.gov/PPP, which there's a link on that website, you'll see loan forgiveness requirements and loan review procedures as amended. So we're talking about the requirements. So there's a PDF that you will click on. It's 62 pages. And honestly, I've only been able to just skim it. But basically, I believe it also came out on, came out on the 19th. What is that? 4 days ago, 5 days ago. So I've skimmed it. Basically, it's just, in my opinion, providing more than what we would see on the applications. When I skimmed it, I didn't see any sections that caused me any alarm. Okay, so we've been talking about PPP second round, first draw, second draw, and the forgiveness we now have. And so I was very pleased. I had a hunch that when we were all together on the 28th in the original seminar, I was hoping by the 24th we'd have everything. Now, part of the reason I felt comfortable with that is that the law required the SBA to come out with what it did all by the 24th. I was hoping that the IRS would have been able to update its information before the 24th. Just a minor side note, the IRS in December released that they were putting everything on hold related to Form 7200 in terms of processing them until January 21st. And so I was thinking, well, if we did this on the 24th, we would have the updates from the IRS by the 24th, because had a hunch that, well, maybe the part of the reason they're taking a pause is to come back and clarify all this. So we're going to get to the ERTC. I only have 3 slides related to the economic impact payments, which we did discuss on the 28th. So the EIP, aka stimulus checks. So update from the original seminar. What the IRS released, and I think it was on the 6th or something like that, that the IRS will send a notice 1444 to indicate the amount received for the first EIP. And then the IRS is going to send separate a notice 1444B to indicate the amount received for the second EIP. Below is what I already presented. It's not changed, which is for the first stimulus check or the second stimulus check, if you didn't get what you should have qualified for, then when you file your 2020 tax return, that's where you will get that amount. Now, when we talked on the 28th, I didn't know where that was going to show up. So what I've highlighted here is that will show up on Form 1040. That will show up on line 1040, line 30. So this is now from the IRS's instructions. And what I've gathered is there's not going to be a form, which I'm sure if we're using software, the worksheet I'm going to show you that comes from the instructions, that probably and hopefully none of us are going to get a pencil out and have to calculate this manually. Hopefully we're all going to be using software to determine this. However, in the event that you need to go take a gander at it, I put a link on the website to the 1040 instructions, and I've gone through to point out what page to go to on the Form 1040 for year 2020 instructions. And it's related to line 30. That's called the recovery rebate credit, but this is directly the EIP. And on page 57 and 58, it walks you through. And then on page 59, there is a worksheet that walks you through all of that. And it all then goes to line 30. And it does include the EIP 1 and the EIP 2. Now, I want to be clear for those of you that maybe are listening in, don't do taxes to the extent of ever looking at this in the minutia. First of all, I congratulate you for getting in the weeds with us and jumping in the deep end of the pool. And from this perspective, what I want to make super, super clear, and the reason I wanted to put the page numbers, which is page 57, 58, and 59, is that the preceding pages are EIC, which is the is the earned income credit. The earned income credit is not EIP. EIC is a completely different credit. And the only reason I say that is that when you go through and you're looking at the worksheets and you're looking at income and you're doing calculations and you're looking at details, to those that maybe don't deal with this very often, they very well could confuse EIC for EIP. EIP, economic impact payment, we all know is the stimulus checks. So here's Form 1040, and it's going to be on page 2 that we will see this. And on page 2, it's line 30. So line 30 is where we will see that. Why am I even showing you that? Well, if you remember on the 28th, I guess it might have been in the year, I did a year-end tax strategy seminar. So if you were in that one, But what I'm really big on, and I did videos on before y'all probably knew me. There might be a couple of you. Mary Ann, I think, has known us from back in 18 or 19, and probably a few of you others, which I appreciate that. But nonetheless, when we're looking at the person who's not preparing the return, okay, they should know key places to look to make sure something's on there. And I don't let my clients have the excuse of not being able to read English just because it's on a form that's produced by the IRS. Okay? Because Form 1040 or Schedule A and all the rest, they're all still written in English. It's still, if you kind of just start following it down, it's like, okay, that makes sense. That's where this is. That's where that's from. My point is saying this is that I will try to be getting the word out, although no one seems to care about videos that I put out related to the stimulus checks, because I guess it's not really my viewers. Side note is this: if you feel like you didn't get the full amount when you get your Form 1040, go to line 30. Is there a dollar amount on there? Yes or no? No. Then figure out why. The worksheet that we just looked at, Bet Your Bottom Dollar, will be in the worksheets that go with the tax return. It's the same as the qualified business income deduction that I indicate to everybody. Now it's on a page 1, but nonetheless, there are key line items. And here's why I know they're key. Here's why I know they're key. Because I review tax returns all the time. And how do I know they're right? Well, when I scan Form 1040, I'm going to be looking at line 30 every single time. And I'm going to go, okay, does that make sense that it's blank? Yes, because this client always makes a ton of money. That makes sense. But I'm always going to be looking at line 30 every single time because that'll help make sure that I'm catching it. On the employee retention tax credit for employers. So I've done a number of seminars since the 28th. And so I've pulled from that and then updated it further today. So this entire section has been redone for our free update. I did check right before that we're still dealing with the IRS, that they have not updated it. Okay, so what they're indicating is you need to come back and check us out. So I'm noticing at the bottom it says 1/8/21. That means that I pulled this from a 1/8 seminar, but I did verify all the information. So with the employee retention credit, we know the prior law, you couldn't take it if you got PPP. It was 50% or wages, 10% or 10,000 max per annual. And then it was not limited, it was refundable, not available for 50% or more owners or self-employed. I'm realizing I didn't highlight the 50% or more. Thank you to Rob. Rob, I was on a live and this question came up, and I probably took 10 minutes trying to research it, couldn't quite find it. Rob emailed me and said, it's the paragraph you keep skipping over. And then Rob and I analyzed this as well later. And bottom line is, if it's 50% or more owners, don't qualify for the employee retention credit. I had been saying, well, the owners don't qualify, 5% or more, 2% or more. And part of that is that I pretty much, with most of my clients, they're either all related or it's 1 to 2 owners and we're at the 50% or more. Nonetheless, when you read on the employee retention tax credit, it is 50% or more owners and their family. Family attribution rules do come into play. You can take it if you got the PPP. It is retroactive to wages that are 313. Now, here's what's different, and I've already highlighted this at the beginning in case some dropped off before they would get to here, but the credit is 50% of qualified wages in 2020. It's 70% of qualified wages in 2021. This all has been extended through 6/30/2021. So in calendar year 2020, it's 10,000 max wages for the year. So it'd be a max $5,000 credit per employee per 2020. Then it's a 10,000 max wages per quarter 1 and per quarter 2. So it's a max 7,000 credit per quarter, or 14,000 max credit in 2021. It's still per employee. It's not limited to Social Security taxes and refundable, and then still not available for 50% or more, or the self-employed. So there's somebody that I follow on Twitter, and they had put this together and gave permission to use it in my seminar. So courtesy of Chris Wittich, but you can refer back to this. I'm not going to go through it, but basically here's this chart that he put together. You might find similar ones now, but the ERTC for 2020, answer these questions to determine it. Here's what it is for 2021. And then of course, we know that if we have a reduction in gross receipts, in 2020, it's 50%, and in 2021, it's 20%, which is covered in this slide. So in this right here, okay, what I'm covering is what I had talked about last time. This right here walks you through, talks about the 50% and then the 20%. So the 2020 calculation, when we went through this previously, I just had one calculation. So here's what it is for 2020. We know that the employee retention tax credit is 50%. So you would take the wages that are qualified, and then you would take that amount times 50%. There's your credit. And that would be for the year 2020. So it'd be March 13th and after, qualified wages for the year, $5,000 per employee per 2020. Another way to just look at it is if you just have salary clients and you were able to break it out very easily. This one here is breaking it out by hour and then the number of hours that were in that period of time where there was qualified wages. And then this would be in essence of 2020, just another way to look at it. You can figure it out what's best for you, but this is just then taking, well, what were the total wages during that time times 50%. In 2021, you would have this and it's 70%. And then this is then per quarter. And this is the credit that you would get each quarter. So again, on this, if you just know the total wages and you didn't want to break it out hour by hour, depending on how you calculate it, then it's 70% and it's per quarter. On the Form 7200, as I had talked about earlier, we know with Form 7200, this is one way to get the credit. Just as a refresh, talking about now going into 2021, here are all the ways that you are able to take advantage and experience the benefit of these tax credits, okay? The first is, if you catch the tax credit quick enough, okay? The first is you reduce down your next payroll deposit. So whatever your tax credit is, you would take whatever you're getting ready to deposit for payroll taxes, and you would reduce it down by the amount of your credit. The second way to take advantage of this is to file a Form 7200. You can file this in advance of actually experiencing the credit. The third way is that on your Form 941, you are able to report the credit. You can either do it as a credit carryover or get a refund. And the fourth way is that if you didn't reduce down your payroll deposit, if you didn't file a Form 7200 and you didn't put it on your 941, you can put it on your 941X. Now, I'm just now remembering, to be honest with you, before I went to sleep last night, I remember finding on the IRS website that it indicated, and this wasn't new information. And then this morning, I couldn't figure out where it was. And if you go to the IRS website, which I gave you a link to it, and you go to the credits and then you go to the employee retention tax credit, there is so much information. So I apologize, I can't throw it up here for you. And I know I didn't dream it, at least I don't think so. But what I read was, and it wasn't new, was can somebody who didn't discover their employee retention tax credit was possible until after the year closed and they filed a 941, the IRS said, well, you just file a Form 941X. Well, we've all known that. I'm just saying that I found it in that section, but it was not new. It was something that was already in there from long ago. So the one thing I want you to note is that when you go to the IRS website, irs.gov, and I've got a link again, to the tax credits. I've got another link that takes you right to the employee retention tax credit. All the rules for 2020 are the same. The rules didn't change. The calculation didn't change. Okay. Now, there's one provision that when you read in the new law, the provision in there is that everywhere it says 100 employees, it's to read 500 employees. And I'm just going to be honest with you. I don't know why I'm just being mind tangled on that. So to be conservative, I don't believe that that's retroactive to 2020. I think that that is after 12/31/20. So all I'm saying to you is if you're an employer and you have up to you have over 100 employees, you need to figure that one out. Okay, I'm just being honest with you. I can't tell. I've read it over and over and over and over, and I can't figure it out. That's why I would love it if the IRS would simply update, because I think that might be the one update there of 500 employees, maybe. But when we're talking about what the calculation is, what the rules are you closed down, if you're essential, and all that good stuff, okay, it's all the same. The IRS is going to have to update, though, in my opinion. No, scratch that. What the IRS should do, let me put it that way, is come up with a simpler way than filing a 941X for those that need to take advantage of the retroactive tax credit. Every single one of my clients, when I sent them the Form 7200, had no clue there was such a credit. None. We pulled together the information, we got with the payroll company, we figured out what the dates were, we know our clients well enough, boutique practice, here you go. So with that being said, the clients that I'm working with, the majority of them, 99% of them, are through one payroll company. I was able to communicate to them not to file Form 941 for fourth quarter. That's why we can file Form 7200. Now, the IRS indicated they're accepting Form 7200, but they're not processing checks until Thursday, the 21st of January. If you submitted a Form 7200, the IRS indicated on the IRS website that they'll send you a letter if you don't qualify for it, but they're not going to start sending checks again until the 21st, which is, now we're there, it's the 24th now. So with that being said, we went ahead and we submitted the Form 7200s. Now, I did wait until Monday, which I guess would have been the 18th. I waited till Monday. A couple reasons for it. I was hoping the IRS might come up with some update, and I thought, well, just in case they come up with some new form or some easier way to do it or something, let's wait and see if that's going to come into play. Well, when we hit Monday, the 18th, I said, you know what? We're just filing them, because none of my clients had filed 941. And we know we can file Form 7200 as long as it's filed before 941. We also know in the stimulus that it was clear that if you were taking a retroactive tax credit, you would take it in the quarter that the law was enacted, which was fourth quarter. So we took them, we took the credits, and we had our clients fax them in, which I think is great because they're going to go in probably before a mad rush coming up. So on the Form 7200, the key here is this. If you, because it's the 24th, you got all next week, and technically Form 941 is not due until February 1st because the 31st falls on a weekend. So you can still get your Form 7200 in, and or you can just reflect the credit on your Form 941. But when you're doing the Form 7200, the stimulus was clear that you do not file amended 941s back for first, second, and third quarter. You would take it all on fourth quarter 941, or you can take it all on the Form 7200. And it's a very simple form if you haven't seen it before, but you're going to check it as fourth quarter. The stimulus indicated the reason you don't have to go back and amend first, second, or third quarter 941 is that it's a refundable credit that can be carried over. The other aspect to know is why you cannot file a Form 7200 for second, third quarter is that a Form 7200 can only be filed before 941. And I will tell you this, okay? We filed one on a client. It was in December. and we inadvertently marked it for a prior quarter. Okay, just a human error. And we got a letter back saying, oh, you can't submit this because you can't submit it after the Form 941. So with that being said, basically you're putting down what the credit is. The other aspect is that on that little dot there, you're going to pull your 941 from the prior quarter and you're going to list what was on line 2. This is a way for the IRS to verify the person who's submitting this is, in essence, the employer. You fax it. It's the only way to submit it. You don't show your calculation on the form. And so we have a Form 7200. What I want to note to you as well is we know that a form's been updated, a little secret for everybody, or for those that are maybe just now paying attention to these kind of forms. At the top there, it says March 2020. That means that it was last updated in March. Any updates they do, obviously, are going to be something dated in 2021. So we know that we're looking at that. So you're going to basically put that amount on line 1 for your employee retention tax credit. The self-employed do not qualify for this, okay? So from this perspective, you don't have anything to play there. I will tell you this, and I'm just now remembering it, okay? So Form 7202, it's not in the slides. Form 7202, okay, is what the self-employed uses on themselves getting the tax credit. I am going to be doing a separate video on the Form 7202 because everybody's going to miss it. But the Form 7202 is the tax credits, not for employee retention tax credit, okay, because the self-employed doesn't qualify, but for the sick leave credits, for the family paid leave tax credits. That is on Form 7202, which goes with the Form 1040. You figure out what the credit is. It's a refundable credit that goes to Schedule 3. Schedule 3 goes into Form 1040. Now, for the self-employed that have employees, they are using Form 7200 or Form 941 or 941X to take any of these credits, whether it's employee retention credit, the sick leave credit, or the paid family leave credit. They're using the Form 7200 because they're an employer as it relates to that. Let's see. All right, so then you total it. Now, the Form 7200, the IRS came out with this thanks to, there was a couple of people that had emailed me. I think Joe, I can't remember, I apologize, but it's irrelevant. A couple of people emailed me to let me know that this got released because this came out, I think, on the 14th or something like that of December, but making it clear that you can only file a Form 7200 for 2020 up until February 1st, but of course it has to be before 941 is filed. The thing to note, though, is that you're going to still get this credit, okay? You're still going to get the credit. So what are the options for 2020? Well, you can report it on your fourth quarter 941 if you hadn't filed it. If you hadn't filed that, well, you can put it on a Form 7200. Well, why a Form 7200 if you hadn't filed 941? Well, in my opinion, you get your money quicker. Why? Form 7200, as I understand it, has their special fax machine, if you will, and there's a specific group that is doing the Form 7200, reviewing them, approving them, and sending out the check. The purpose of the Form 7200, as you read at the top, is that it's for an advance. And because it's for an advance, you're then in a set of circumstances where they are getting the money to you pronto. When you put it on a 941 and you do it as a refund, you're going in with all other 941s. It's not a special unit other than it's the special unit for payroll at the IRS. It's not that common that someone's getting a refund on Form 941. In my opinion, it's a slower process. Now, if Form 941 has been filed, of course, you don't have the choice of filing a Form 7200. But if you filed 941 and it wasn't on there, which I think is going to be millions and millions of small business owners, but nonetheless, what you can do is file a 941X. This is the great thing with the IRS. You can always go and amend something. You can always go back and make it right. Now, if you're choosing option 2, which is to file Form 7200, This is what I had indicated earlier, but you need to mark it fourth quarter. So if your payroll company already filed 941, then you need to do a 941X. Now, what I would recommend is that you hold on for like 1 minute, which means like maybe a week or so. I think the IRS, I would hope, most likely is going to maybe update the Form 7200 to say, like add a box to say, hey, I already filed my 941, but here's my credit nonetheless. Because when you do a Form 941, if you hadn't taken the credit previously, you hadn't reduced down a payroll deposit, it's just going to result in the same amount of money coming back to you, a refund, as Form 7200 would. Okay, the reason Form 7200 has to be filed before Form 941 is that it needs to be reconciled, if you will, on the Form 941, but it's not going to result in a different dollar amount, assuming no payroll deposit was reduced down for this. So my hunch is before anybody hauls off and files a 941X, because you have plenty of time to file 941X, before you haul off and do that, you wait and see if the IRS comes out with just an expansion of Form 7200. I'll tell you this though, if we get much into early February, I don't have any clients that are going to have to file an amended 941, but if you have to file it, I wouldn't wait much longer than early February, meaning like in a week and a half. I mean, if the IRS isn't going to come out with an easier way, then somehow that department is stuck on some technicalities or they're trying to figure out some stuff, and you don't have to wait because the calculation is the same in 2020. The rules and regulations are the same in 2020. Now, one of the things I want to do is I'm done with my slides. So I want to bring up a couple of things. The first thing is that you have a link to let me bring this up real quick. All right, so the tools, this is what you have a link to, okay? This is what's up. Can you, Amanda, you able to see now the website?
Yes.
Hey.
Yes.
Okay. So you should have a link to this. If you don't, it's jjthecpa.com/the-tools. It's free seminar. What I want you to note is most likely within about an hour, hour and a half, this part will be gone. It's the link to the video of the seminar I did on the 28th. I already provided it to you at least once, if not twice. So you should already have the link. If you don't have the link, let's see, let's go ahead and why don't we copy this link and I'll send it to everybody. So I'll put this in the comments. And the reason is that I don't want to be in a circumstance where somebody's able to watch what you paid for. Amanda, I'd appreciate if I could get your technical help here. I don't know how to get to chat. Oh, wait a second. Okay, I just found it. You just had to come. You had to come in. Okay, so this is right here. This is the link to the 12/28/20 seminar. Okay, so don't hear me wrong. I'm not taking the video down. It's still going to be unlisted. It'll still be on YouTube. But when I post this free seminar up on YouTube later today, everybody will be able to come to this page. What will be off of it is the link to the video. So I've put it in there for you all to see. And of course, the Zoom will be off there. So what I want you to note is that I've got a number of links here. And what I also want you to feel comfortable with, though, even though I gave you direct links, okay, for those of you that aren't familiar with the IRS, this is irs.gov. And right off the bat, if you want to know about your economic impact payment, which we talked about earlier, you're going to click on this, and into your heart's content, you will find what it is that you're looking for. You know, I like to joke on this. I don't think anybody's indicated they've been offended by it. But by the way, it's written in English. It's written a lot, the little secret, a lot of the IRS instructions are meant to be written at a sixth grade level. Nonetheless, anything you'd want to know about this, questions about it, the automatic reissuing, how do you recover it, etc. But back to this, okay? For those of you that want to look, and I will tell you this: if you're rumbling with the employee retention tax credit, I feel your pain. But with that, you go to the coronavirus tax relief, okay? You're going to see down at the bottom employer tax credits. And then this is going to talk about all the different tax credits, okay? And then here you're going to click on a section that's going to take you to the employee retention tax credit. And then the biggest help I think the IRS has put together is on the FAQs. And so we still see the notice up here. A little hint is that when you are reviewing any IRS web page, they always tell you at the bottom the last time they updated it. So we know this page here that covers all the credits, or scratch that. The employee retention credit, the main one, was last updated in September. So we know we need to wait. But what I want to indicate to you is that when you go to the FAQs, okay, and what I want to show you is that I put that right on the website. IRS FAQs on the employee retention tax credit. Boom. It just took you where we just were. Okay. This is your secret weapon of when you're going through it. And for those that don't read through this stuff all the time, I'm having fun with you because I'm trying to make it light. I'm trying to get you comfortable that when you go to the IRS website, literally all the answers are pretty much here. Literally. And anytime the IRS quotes a code, they give you a link that literally takes you to the code. What's really interesting is that CPAs and EAs and tax professionals, okay, we're preparing returns on all public information, which also tells you this. The IRS is basing what they do on this as well. There's not an IRS agent playing battleship with you on the other side, watching what you do and then going, gotcha, you should have known better. Everybody's looking at the same thing. But when you're looking at this website, okay, here are the key things that I want you to keep in mind is that determining which employers are eligible to claim the employee retention tax credit. So look at this. What's great about this is what is a trade or business for employee retention tax credit? They spell it out. You don't need a degree to understand this, in my opinion. Are you a federal, state, or governmental entity? What organization is considered blah, 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 right? So it runs down all the different employers. Right here, are self-employed eligible? Self-employed are not eligible, right? Household employees, no, right? So let's go back, and probably the most interesting one for most, where everybody's up in knots, that part of my video, I think that I did late last night and posted this morning, was talking about the employee retention tax credit as well. But I feel like everybody's finding ways to not qualify, which I don't know why it makes me mad. It just does. Like, it's not our job to figure out how we don't qualify. Our job is to figure out how do we qualify. But the IRS has done a phenomenal job. And when you go through these, okay, it tries to give you every single scenario. So somebody had scheduled a Zoom with me that's a part of my group 51, because I only do it with that group. We're supposed to be on the phone 45 minutes. We were on it an hour and 45 because we ended up going through this. And here's the thing to note. If you were economically affected by the pandemic, okay, you're in the contention of getting the employee retention tax credit. Now, this assumes you have employees, right? So everybody was in some kind of shutdown. And it talks even through here, what orders are appropriate, okay? If an employer voluntarily suspends their operations, if they have multiple locations, okay? So here is like every scenario. If a governmental orders non-essential business to suspend, well, we know that's obvious. If a governmental order causes suppliers to an essential business to suspend, is the essential business considered to have been suspended operations. And actually, when you read this, an employer with an essential business may be considered to have full or partial shutdown if suppliers are not able to make deliveries critical to cost of goods sold. Okay, like there's a major exception. Now, it does talk about if the customers are affected, and no, if customers are affected, no. Okay, you don't qualify for ERTC just because your customers were affected. Now, if a governmental order requires an employer to close its workplace, but the employer is able to continue operations comparable to its operations prior to closure, read through it. Look at this. We got example 1, 2, and 3. The short answer is yes. Okay, you walk through it. Beautiful examples, right? If a governmental order requires an employer to close its workplace for certain purposes, but the workplace remains open and operational for limited purposes, do they qualify? Yes. Look at this. We got 6 examples. Are an employer's operations considered partially suspended for purposes of the ERTC if the employer is required to reduce its operating hours? Yes. Is an employer that operates a trade or business in multiple locations and is subject to a governmental order requiring full or partial suspension of its operations in some jurisdictions, but not in others, is it considered? Yes. If an operation of trade or business is one member of an aggregated group, you follow? Yes, yes, yes. If an employer is subject to a governmental order or fully or partially suspend its operations in order to substantially blah, 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 blah. Yes, 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 yes. Okay, the IRS is trying to show you every single way that you qualify. And the biggest thing is when we go to qualified wages here, okay, so I'm back on the FAQs. Everybody has a link to this, right? So if you just go back to what I provided, IRS FAQs is where I'm at, and you go to determining qualified wages, right? So if there was a smoking gun of any smoking gun that existed in the history of smoking guns, okay, back to the original Bond movie, back to when Bond was being written in a book. Question 51, may an eligible employer that averaged 100 or fewer employees during 19 treat all wages paid to employees as qualified wages? Yes. So when you're 100 or fewer employees, now that's based on 2019, right? So the thing to note is that if you didn't have more than 100 employees in 19, right, then you don't need to worry about, well, how do I figure out how many employees I had in 19? And I did tell you earlier, I'm up in the air if the 500 employees is retroactive. At this point, I just want to see it by the IRS. I just want to see it on the IRS website when the 500 employee comes into play. I don't have any clients that are at that level. But with this said, let's read it together. Question 51, FAQ. May an eligible employer that averaged 100 and fewer employees during 19 treat all wages paid to employees as qualified wages? Yes. There's a key word there. All, okay, to its employees and qualified, and it says yes. Now I get it. If we were mere mortals, we would stop at the word yes. Well, none of us are mere mortals. So an employer, okay, an eligible employer. So remember I showed you when we first got there, what's an eligible employer? Someone has a trade or business. An eligible employer that averaged 100 or few employees during 19 may treat all wages paid to its employees after March 12th and before January during any period in the calendar quarter in which the employer's business operations are fully or partially suspended due to governmental order, or a calendar quarter in which the employer experiences a significant decline in gross receipts as qualified wages subject to the maximum of 10,000 per employee for all quarters, meaning for the year. So when you read this, and then there's another section that talks about it and another section talks about it, and I'm just going to invite you to go and look at the sections. It's all right where I told you. If you look at these sections, okay, and you look, it's yes, yes, yes. And if you look, and I was hoping I was going to see it, but how to claim, allocated, special provisions, third party, gosh dang it. There, you're just going to have to search this, because if you've got a client and they're an essential business and now you're shaking in your boots on whether or not you got to do it, take a deep breath, have a cup of coffee, have an adult beverage, whatever you're supposed to do, and breathe and go and look, because the IRS has given examples specific to essential businesses. I don't know how a business that's 100 or less employees, obviously based on 19, doesn't qualify for this. How do you not qualify for this? So anyways, there are specifics as we go into that. All right, so enough on the ERTC. Basically what I wanted to tell you is that any questions that you have, you need to just go right to the links that I provided, and you just got to go through it. They break this down into sections. Let's see, other issues. Oh, look at this. I found it. 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 Okay, what I told you last night, I didn't dream it. Okay, question 94. Here's some gold. Here's a gold boulder that was just dropped, maybe. May an eligible employer change an election to forego, blah, blah, blah. But then look at now in the example. And it talks about here, this is where I read it, that you can, after the year's closed, file a 941. Okay. I think that's the section. Well, let's look here. All right, before I say all that, let me read it actually. Employer H, blah, 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 then I retain second, blah, blah, blah. Declines, makes an adjustment, should not use and paid in the second quarter. Yeah, this, my interpretation of this is that you're filing a 941X, and then if you'll look at this page, okay, they updated on the 7th, but I think they updated on the 7th for this thing, is basically talking about when you file a 941X, which is in the circumstances that we are in. So I believe this was the section that I read last night, talking about the fact that if you forego, meaning you didn't take it, then when do you take it? You take it in the next quarter. Okay, so the other thing I gave you a link to is everything SBA, which is just the sba.gov/PPP. I did want to walk you through this. This is put together by the SBA. This is not mine. It's public information. If you just go to EIDL grant and you look at what they put out in the last week, you go right here and it's public information. So I'm providing public information to you. And so on this, on the SBA, when we're looking at the EIDL, okay? So let's just skip to it, okay? Let's just get down to it because I gave you a link to this. I'll let you go figure out anything that you want to figure out as it relates to the EIDL, because nothing changed in my review on the actual EIDL. This walks you through the application, how it's eligible, shows you the questions that you're going to be asked. Okay, but now here's what everybody is wanting to know. And I found this actually late last night after I did the video, but it's consistent with the video that I posted today, which is this. There's targeted EIDL advance that was put in, okay? And then there is advance funds up to 10,000 available to applicants, okay? Now, what it talks about here, and I'm not going to go through it, I've given you the link, you can go back and read it, but the SBA will reach out to EIDL applicants that have already received the EIDL advance that didn't get the 10 between 1. Applicants will be contacted directly by the SBA, the email with instructions on how to submit documentation. Hey, Amanda, will you text Cooper and tell him I'm in the middle of the seminar?
Yes.
And so, you know, we always have to be wary of emails that we get. But anyways, it would be sba.gov or at sba.gov. So check this out, though. I'm still not, applicants may qualify if they're located in low income, can demonstrate a 30% reduction. Okay. Applicants will be contacted directly by the SBA via email in the coming weeks. So this is related to the targeted EIDL advance. So you may know this, but I did a seminar on behalf of the SBA a couple of weeks ago at this point, and the district director was just sharing, not with me, but publicly on that seminar, that the understanding was that there in essence is 2 prongs which this is nothing new. Excuse me, this is nothing new from what I've said in my prior videos, is that the one prong is if you didn't get the full 10 grand, you're going to get the rest. This is what it was reported during the seminar. You're going to get the rest, whether you didn't get the full amount or it wasn't available when you applied, and then the money's going to be available for future future businesses. And the reason for that is that that's how it's supposed to work. Then there's the aspect of this targeted EIDL advance that is something that can be applied for if you meet these parameters. But when you read this, I'm concluding, okay, I'm concluding here we've got COVID-19 targeted advance, bah, 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 and then we have the advance funds of up to 10 grand. So the IRS has, I'm sorry, the SBA has not done anything about this yet, right? I don't think they have to do anything till the 31st. They're going to reach out. It seems as though it's going to be two different programs, but when I read this, it does indicate that it's going to be for those in targeted areas. But what I further understand from what I've read from the SBA is in that seminar, or what was reported in that seminar, excuse me, is that once this has been allocated, once the targeted amount has been allocated, if you will, then it will go to those that didn't get the full amount. I'm just telling you, there's still just confusion on it, in my opinion. So this is brand new information that just came out from the SBA. This just talks about some aspects related to the Paycheck Protection Program. That's kind of nice, resources. The one thing too is that, especially for those that are helping multiple individuals, you know, on the PPP, especially if their bank is giving them some hassle. But if you go to, oh, wait a minute. If you go into the first draw, I believe, view all lenders near you in a match. They have a lender match program. Find lenders. So you click on here, and my understanding is you put some information in, and then I'm assuming a bank reaches out to you, and or you can look for banks that are, you know, wherever you are. So they're providing that. The one last thing I was going to mention that I noticed, SBA.gov is, I'm going to see if I can get back to it because the SBA has so many different programs, but they've announced the loan program with the, I think it's the SBO Federal Business Guide. I don't know if I'm going to get back to it, and I don't want to waste your time. But nonetheless, there are, the SBA is, let's see, scams, launch, manage. It was like a golden nugget. First draw, express loans. Okay, here it is. So where I went was just to the main page, COVID, that yellow strip. Clicked on that, and we have the SBA is preparing to offer the shuttered venue operators. So this is talking about what is a shuttered vendor operator, which basically is those like in the entertainment type business. And then there's also this targeted EIDL advance that we just talked about. Okay, targeted, right? Oh, okay. So this is on the loan. Okay, and the SBA said don't apply for a loan. So the targeted EIDL advance. Okay, applicants do not need to take action. It's same as what's been provided. They qualify. Then it says next, the SBA will reach out to those who applied for the EIDL, blah, 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 and have fewer than 300. So it does seem as though it's going to be to the targeted that didn't get it. And probably what's going to happen, if I had to guess, is the SBA is going to contact everybody and say, hey, if you have these parameters, we're going to give you your money first. If you're low income and your receipts have dropped 30%. And then if you don't qualify for that, I'm assuming then once that money's been given out, then they're going to provide it to those that just didn't get the full 10,000, as long as they're less than 300 employees. Notice here, though, the EIDL advance is no longer available. And so I know that there were some that had indicated that as soon as the new provisions went into play, that they hurried and applied for another EIDL. There's not another EIDL. And what they're indicating here is that if you apply for an EIDL now, there's not an option and you're not going to get the EIDL advance. You may, if you haven't applied for an EIDL, then you can apply for an EIDL. You probably can be considered for it. There's not going to be any money for it. And then you're probably in line, if you will, but you do not apply for an EIDL loan to get an EIDL grant only. You apply for the loan, and while you're waiting for the loan, you get the advance. So I think that I covered. You've got the PDF, everything related to PPP. I give you the link to that EIDL grant PowerPoint. I give you the IRS webpage to the stimulus, the ERTC, Form 7200. The link that we have here to Form 7200 is to the landing page. I didn't want to give you the link just to the form, because if they update the form, you wouldn't know it. So I'm giving it to you at the landing page. Now, if you go to the instructions of the Form 7200 and you look down here, it's employee retention tax credit. Examples, more information, who, okay. I got to tell y'all, I mean, all of us are trying to keep up with this, and I really appreciated the SBA redoing their website, because I'll tell you this right now, with the IRS, bless their hearts, I'll say it that way, but to get back to what you found, it is just a little frustrating. So anyways, at the end of the day, if you're looking for the employee retention tax credit, look for how you do qualify, because I just don't see how you don't. And then IRS page on the EIP, I took you to the calculation, and then I give you the full law related to the Consolidated Appropriations Act, the full CARES Act, and the Family First. And so with that being said, let's see here, from current slide. So anyways, I thought the seminar would be an hour. It's 2 hours and 15 minutes. When I had indicated we were going to do the seminar, I was just going to do the update. It won't be possible for me to field every question. I know that I fielded, I don't know, 4 hours worth of questions. And so I feel like I've met my obligation of Q&A in the first go around. This was as a courtesy, since it was so new on the 28th, to provide to you as much as I could based on what we've got. And so we've talked about the PPP first draw, second draw, those applications, those qualifications, those calculations, also on the simplified PPP forgiveness application, if you will, and some of the minutia on that, as well as then the economic injury impact payment, as well as then the employee retention tax credit. Again, nothing new on the sick leave and the family paid leave at all. We all know it's extended through March 31st. The only thing I didn't put in there was that for the individual self-employed, if you will, that's going to take advantage of those two tax credits. It's on Form 7200 on them. So with that being said, Amanda, I will have to just be hardcore that I'll take questions, and we'll have to finish up in 40 minutes. I have an obligation with family. And so normally I'd probably stay till 10 o'clock answering everything. But I do feel okay just taking as many questions as I can in the 40 minutes. So Amanda, I'm going to just say it this way. It's got to just be a quick question. It's got to be one. If you've given me a lot of detail, we don't have time for that. So if you want to pop through as many as you can, and I'm going to answer them like I did when we did the SBA, which is going to be, non-JJ to CPA. It'll be like I'm on a radio program and I've got 30 seconds for the answer. So with that, thank you. And we will be putting this up on YouTube. It'll be public information. You can go back to this website to find a link to this video. Remember what I said, there will no longer be a link to the video that's there now. We've shared that with you. That video will still be up, but that will not be available to the public or any of those calculations or worksheets. What will be available is this video, and it'll probably be by the end of the day, unless we have a technical difficulty. All right, so thank you so much for coming back. I appreciate you all, and thank you for the support. When I was updating the slides, when I did this on the 28th, I had 47,000 subscribers. Thank you to all of you. And as of today, where are we at? We are at 56,000 subscribers. So that's been huge. I appreciate it. Thank you for all the support. All right, Amanda.
Anna asked, would grants be included?
Oh, I can't hear you.
Well, you might need to turn your volume up on your computer.
Oh, you're right. Hang on.
You need me to do it?
Nope. All right, here we go.
Anna asked, would grants be included in gross receipts? I think no, but just want to be sure.
All right. I'm going to close this door because I'm hearing this. All right. Let's see what we got here. Volume. Okay, try it again.
Testing, 1, 2, 3.
Yep.
Okay, Anna asked, would grants be included in gross receipts? I think no, but just want to be sure.
Specifically, the SBA said no. PPP, state grant, federal grant, EIDL grant, it's just gross wages or gross receipts of the business. That is the business's business.
Todd asked, what is the reason to do a 7,200 before the fourth quarter? Is it because there were no shutdown dates in the fourth quarter?
No, it's just that you can't do a Form 7200 for first, second, or third at this time. You can do a Form 7200 as long as you haven't filed 941 for fourth quarter. And so for right now, if you're taking a retroactive tax credit of any kind, the reason to file a Form 7200 for 2020 marked fourth quarter is that it's the only quarter you can file it for. All of the credits are a carryover refundable credit. And the Form 7200, in its simplest explanation, gets you your money quicker. If you don't want to file a Form 7200, you can file a 941. If Form 941's already been filed, then you file a 941X. Now, that's all related to 2020. For 2021, first quarter, you qualify. You can file a 7200 all the way up until you would file 941 for first quarter for 2021. And first quarter 941 is due April 30th. So you have until then to file a 7200 as long as it's before 941.
Aaron asked, if you file the 7,200 first, do you need to reconcile the fourth quarter 941?
You do, and it's, from what I understand, it's simple. We have a payroll company that's doing it all, but there's a section that you would indicate it, and really it's a zero-sum game. It's just what your tax is, what did you pay, here's your credit, and then how much did you take on your 7,200, zero. So that's why I think that the IRS will come out with something to make it simple. But if you filed 7,200, yes, you have to reflect it on your Form 941, just informational purposes only.
Herb asked, if we send Form 7,200, do we have to deduct the credit we ask for from our Q4 2020 941 before submitting it?
Yes, but what you'll show is that the simplest way to describe it is you'll show the credit, but then you'll show you got the advance credit, and it zeroes itself out. Again, this is why I think the IRS is going to go, you know what, if people already filed the 941 it doesn't make any difference because they're still going to get a refund. Because if you don't file 7,200 and you report this on your 941, it says, well, here's your tax, here's what you paid, here's your credit. Oh, you're due a refund. But yes, you got to reflect it on the 941.
Sorry, it popped up and it messed me up. Felice, for ERTC, what's the deal with essential employees versus non-essential employees? I keep getting confused over whether my employees are essential or not.
So if you go to question 51, all employees are included. So you have to look at, do you qualify for the credit? And if you're 100 or less employees, based on 2019, if you're 100 or less employees, then all wages to all employees will qualify for the credit. And so there's no distinction between essential employees or non-essential employees. It makes it clear in question 51. Now, the other questions on that same FAQ page, if you have more than 100 employees, then you will only get the credit for those employees that you paid that were not working. Still no distinction between essential and non-essential. Reminder, I'm curious, I need the IRS to clarify this, at least for me, is that changed to 500 in 2020. But if you're 100 or less, no distinction between the employees.
Greg asked, what's the deadline for faxing in the Form 7200 with retroactive credits? Does it have to be filed by 2/1/2021?
Yep, and then also filed before you file 941 for fourth quarter, which is also due February 1st. So with our clients that we had them all fax them on Monday, we had all of them get proof that they had faxed it. And then we've asked the payroll company to go ahead and file the 941s probably Wednesday or Thursday of this week, make sure that they go through. Now, from my opinion, the IRS is really good at technicalities in the sense that if you get the 7,200 in next week and the 941 gets after, the day after, the second day after, should work itself out. Worst case, you don't get your 7,200 in before the 941, or you thought you got it in and the IRS says, we already got your 941, so you can't file 7,200. Well, then you file a 941X. And I don't know what the statute, I can't recall what the statute is, but it's probably 2 years at least to file a Form 941X. Plenty of time.
Casey asked, I am self-employed with one employee, albeit a very, very small wage. I do pay 941 taxes. Do I qualify for the ERTC?
So if your employee, if you qualify for the ERTC, it doesn't matter that you're self-employed or not if you have employees. So then you would look and go, well, I have an employee, so I'm in the running to qualify. Well, were you shut down or in an area that was partially shut down? Were you affected? And if the answer is yes, then you'll get the ERTC, but only on the wages of your employee, and you would file it the same way that we've been discussing as the employee, as the employer. So here's the short answer. Yes, on the wages of your employee, that's what would qualify for the ERTC, assuming you meet the other qualifications.
Michael asked, does it make sense to get an SBA 7A loan given the first 6-month period forgiveness of principal and interest?
Okay, so I don't know the answer to that because it's too up in the air, too many parameters. But I will know this, if you're asking what I think you're asking, if you get that loan, the government will pay the principal and the interest. It's not considered income. It doesn't reduce down your expenses. You're still able to take the expense, which is interesting. You still get to take the interest expense. So your payments are made for 6 months. I don't think you're asking, should I take a loan just because the payments are paid for 6 months? You would have to, of course, then qualify, and you would need to be in need for that loan. So you may have more to it, and I probably wouldn't want to comment much further than that anyways. But if you need it, go get it, and you can always pay that stuff back.
Alan asked, what is the magic period of coverage for the ERTC if you receive the PPP-1 proceeds? Is it March 13th plus 20 days for a total of 21 days?
So it's March 13th and after. And at this point, it's March 13th of 2020 through June 30, 2021. And you got the 2 ways to qualify, which we talked about that. And then there are many businesses that shut down, right? They shut down for a period of time. They may have opened and then had to shut down again, or they were closed. I visited with somebody, did a phone consult, and half their business was shut down the entire year. And so they're going to qualify for the entire year. They have an official letter. There's no 2 ways about it. Their business, half of it was shut down. So they're going to qualify that whole time. In the state of Oklahoma, for my clients, based on our research, based on the closures, and I don't even have to worry about this essential discussion because none of my clients fell into that. I did have a few clients that you would think they'd be essential if you just looked at it, but their operations were affected. They were only able to work on emergencies, if you will. But nonetheless, all of my clients qualified for the Form 7200. And in Oklahoma, it was 21 days. And there were other provisions, but I don't have clients that are restaurants and all the rest. And so for me, if you were looking at that example, I should have clarified that that was just an example and it was based on, what we experienced. So there's really no magic. It depends on your area, your city, county, state.
Marianne asked, if a client did not file any payroll forms or made any deposits for 2020, can they file the entire year now? They had bad advice and no real tax person. Also, how would PPP work for them?
Yeah, if you have wages, you have wages. So they would need to file everything, get caught up. It doesn't preclude them from getting any tax credits, which would obviously help them offset anything that they hadn't paid. And so, in my opinion, if it's low enough, we know that there is a way to file one annual report, but we won't mess with that because that's about the rarest of circumstances. So they would need to file all Form 941s, whatever the tax and the wages are for each one of those, whatever the credits were, because they're going to have to go back and file original 941s. They would then reflect, in my opinion, the credit in the quarter of the 941 because it's the first time that they're filing it. I don't believe they qualify for filing a 7200. Without going into further explanation, it's just because they need to go back and file all the reports related to PPP. If you have wages, you have wages. I would recommend them getting everything caught up ASAP, get W-2s, get W-3s, be able to present that. I do think they should be, they need to get it all filed with the IRS like right before they file a PPP at the latest, because I believe the SBA is checking that they have wages, that they are an employer, and they're checking it up front. And so you don't want to have potentially someone filing for PPP and they're flagged for committing fraud because they don't have any wages. But at the end of the day, wages are wages. You got to report them. And then here's the thing. Here's what's crazy about this, okay? Is that you take somebody and they had payroll, they would have withheld taxes, but they didn't pay them in, right? Well, you still have your credits that offset whatever the taxes are, right? Going to offset it. PPP can be used for paying the amount of taxes that were withheld from those wages. Okay, hang with me. Now, it could not pay the employer portion of payroll taxes other than the state unemployment tax. Okay, and it would not be able to pay any penalties or interest with PPP money. But the way PPP works is that it takes what payroll was paid during the covered period, and paid and incurred indicates that even if payroll was incurred before the covered period, if it's paid during the covered period, it should count. Now, that is not going to be documented anywhere. That's pulling together how the rules work. My point is that getting those payroll documents in, getting them filed, there's going to be an assessment from the IRS. They're going to send letters saying you owe this, penalties and interest. So dissecting after the tax credits, how much would they be able to use from future PPP? I think you need to be very specific about that. And quite frankly, I would say this, you probably really want to make sure what I'm telling you is okay. I don't know why it isn't, because it's all about the employees when it comes to this. And we know that when we look at the prior laws, the 2020 PPP, we are allowed to pay things that were incurred well before the covered period, including taxes. So somebody had taxes state unemployment taxes, and they incurred well before the covered period, but then they're paid during the covered period, they're included. So that's why I think you could, and that would help out everybody, and it helps out the employees because the money that they had withheld then is going to the government. But I would jump on it quick. I think the IRS is most aggressive in their collection activities related to all this. So it's a little bit of a gamble, but it's nonetheless one that you want to, have that person take advantage of, not take advantage of. They need to get on the stick. And obviously that's the reason for your question and you helping them out.
This is from Tony. I'm eligible for both ERTC and PPP second draw in 2021. Is there any sane strategy to delay applying for the second draw to push out the 24-week covered period beyond June 30, 2021 when ERTC expires, i.e. longer time period to include non-overlapping eligible wages, or am I completely nuts?
Not completely nuts there, Tony. But with that being said, I would put zero delay on getting PPP. We don't know when it's going to run out. You do have the 24 weeks. I hear you. We know that we're not able to double dip. That's the entire reason for your question, is you want to make sure you're not double dipping. So with that being said, when you're looking at your 24 weeks, we know that we can elect wages out of the 24 weeks to not be considered for PPP forgiveness purposes and then be considered for the employee retention tax credit. Now, as it relates to that, it's 24 weeks. So I hear what you're saying is if we knew that PPP second draw wasn't going to run out, and remember, you got to apply by March 31st. But if you were to say, well, I'm going to delay a little bit in getting my PPP so that my 24 weeks is longer, or not longer, out further, because you know that you're sucking wind in first quarter. I don't think there's anything wrong with that. That's the intention of this entire thing. But from the standpoint of, let's see.
I did that.
Okay. So from can you see that?
No, people wanted to see you. So.
Oh, they couldn't see me?
No, because you were still sharing your screen.
Oh, you can't see me when I'm sharing the screen?
No,
okay.
We just see you in a little bitty box. We can't see your full face.
Okay, so you unshared it?
Correct.
Okay, perfect. All right, what's the next question? Or did I? No, Tony's question. All right, so I don't see anything ethically wrong with it as long as it's still all going to payroll, as long as you're still going to qualify. I think what you just want to be sure is that you obviously still have payroll that it's going to cover. So I would look at it more as an employer that's in need, that's trying to strategically make sure that their employees are paid, is in essence looking at these benefits. So I would take your question as that, Tony, and I know that that's the direction you're coming from related to that. So just be careful that the money may run out. And then know this, that you have your 24 weeks and you can elect out wages to count for the ERTC, which you can elect those wages out at the beginning There's no real, you know, tracking of the exact dollars. What it's looking at is what are the wages during the covered period, because the SBA has indicated that all wages during the covered period, whether you like it or not, whether you've used all the PPP money in the first 10 days or the first 10 weeks, all wages during the covered period are deemed PPP forgiveness wages. So you still have your 24 weeks to get to it. You don't have to worry about, well, at the beginning it was this, and then I had my remainder of my covered period. So I wouldn't wait. That'd be my gut on it.
Okay. Rob asked for forgiveness, since the payroll and other qualified expenses are now deductible on the tax return. Does it matter if we use 100% wages for forgiveness? Does it hurt us for qualified business income benefit? Don't worry, I'm still waiting.
Hey, and I appreciate that. Great question. And now it doesn't matter if it's all wages. It won't affect the qualified business income deduction because it won't have any kind of tax effect, which is great. So yes, all of my clients, we will just be using on the PPP forgiveness, just the full payroll that was done, because it's easily going to achieve that and there won't be any tax difference. But just one step further, we are deducting, the expenses for that payroll, in the year they were paid, or anything else that was used from PPP in the year paid. I know it's not directly your question, but indirectly. And then again, the only thing we're waiting on, and I don't think we need to wait to file 7200 to take our credits in 941, because that's the first act of us electing that we're using wages during a covered period for ERTC. But the only thing we're now waiting to file for forgiveness is the SBA to tell us, how do we tell them we are electing wages out of PPP forgiveness? We don't have to do that with the sick leave and the paid family leave tax credits, because in the CARES Act, it simply indicated that you just don't include those wages. But the reason that we have this election thing is that in the CARES Act, it indicated it was an either or. Either you got PPP or you got the employee retention tax credit. So I'm assuming there's going to be something. Now, I did note to you, I want to see if there anything further comes out from the IRS, but the SBA, something that just came out, I don't know, like 96 hours ago, in the little footnote, and it talked about you just simply don't include the ERTC wages. That's the only thing we're waiting on at this point, is to just be sure that we've documented. And I will tell you this, if we don't get anything concrete, right, we do have 10 months. I don't want to wait 10 months from the end of the covered period. But if we don't get anything concrete, and those that prepare taxes, I'm going to do a disclosure in that application for my client, and I'm going to provide, here's our wages, here's the amount that they used for credits, here is the amount that we are then using for PPP forgiveness, and put on there, so we're electing it out or something. I'm going to probably go a little overboard, but I'm hoping the SBA will, in essence, make it clear. Once we know that, then we should be able to file for PPP forgiveness without any further delays.
This is from Hun. Do I have to have 20% reduction of gross receipt compared 2019 and 2020 to apply for ERTC?
So the 20% is in 2021, and it would be first quarter 2021 compared to first quarter 2020, second quarter 2021, second quarter 2020 in 2020. So if we're now talking about gross receipts in 2020, you would compare then the quarters in 2020 to the correlating quarter in 2019. And in 2020, it's a 50% hurdle. 20% hurdle in 2021, 50% hurdle in 2020. And you are, in essence, taking whatever quarter you're talking about and comparing it to the prior year.
Michael asked, aggregation, attorney with law firm owns restaurant, which was fully or partially closed from 5/22 to 12/31. Law firm employees also qualify for ERTC?
I don't know that that is, when I think of aggregation, so here's the first thing. I don't know, okay? But let me just tell you what I think, all right? I don't see that as what the SBA is talking about on aggregation. I think that, they're talking about affiliation when we're talking about PPP. Now, when we're talking about the ERTC, I think we see both languages being used, aggregation, affiliation. And in my opinion, I would say no, even though you have common ownership. You have a law practice and it's a separate kind of trade or business. You have a restaurant that's a separate kind of trade or business. And so, in my opinion, I think that these are standalones. The only way that this possibly could work, and I still would be hesitant, is if somehow it's all under one EIN. But I know with attorneys, you've got to have a separate entity. So I like the ingenuity. That was a word I was searching for earlier. But I'm going to say no on that one. I haven't seen anything on point. And it's just that you have separate businesses, even though you have common ownership on that. And then I'd probably back this up with other tax professionals that are on here that, when we're looking at, passive activities or aggregating for qualified business income, we have to have a like kind businesses relying on each other, meaning providing services potentially to each other with common ownership and common control. And so anyways, I would not, but here's the deal. I don't know how a law firm doesn't qualify nonetheless. If you had employees at home, you were not able to have clients come in, court was closed. I mean, at least at all the courts I know of. So I don't know how, as a law practice, you don't qualify for the employee retention credit, because I know here the courts were closed way longer than probably really anything else in Oklahoma. So you should qualify either way, in my opinion. Just approach it separately.
Maria asked, did you just say the 6 months of payments made by the government for the SBA loans are not included in income? It was my understanding that it was income and you deducted the interest. Did that change in December?
It did change in December. I wish that I could point right to it, but I don't think it would be hard for you to find. And I wasn't sure, but I know I have 2 clients and I've looked at it specifically. And whether it's before or now, that is not considered income. And it doesn't seem right to me. Like, it doesn't make sense to me, but it's how it reads and it's how it's going to work. But that interest expense, the business will be able to deduct it just the same as those that got PPP. So yes, in the SBA making those payments, not income, and the interest is deductible. I don't think it would be hard for you to back that up. I'm always big on go check me out, find the documents. That's why in many of my videos down in the body of it, I give you the link to go double check. But I feel 100% on that.
Greg asked, can we use the current Form 7200 for advances on the 2021 payrolls since a new form is not available? It seems to me there was a cutoff date.
So Form 7200 can be used for 2021. There's no update to it at this point. We don't have to wait on an update. I'm only thinking that for those that are having to get a retroactive credit in 2020 that already filed 941, I'm saying, why don't we pause 1 week and give the IRS a little more time to see if they come up with a updated 7200. But when you look at the Form 7200, right now, if you qualify for it, it's the IRS's available form, even though it's March 2020. And even though there's not a first quarter on there, let's see, let me double check what I'm telling you, because there's not a first quarter on the Form 7200. If you're in a situation where you need that money, If I'm you, I am filing that. And, yeah, there's no place to put a first quarter. So I would just check a box for first quarter and indicate that it's for 2020. And I wouldn't wait on the IRS. Now, if you can wait a couple days and you're not in dire straits, maybe wait a couple days. And when I say a couple days, if they don't have this thing out by February 1st, no one should be waiting. Go do your 941X. The IRS is, I'm surprised they don't have this updated. Oh, I can't hear you.
Brooke asked, not sure I caught this, if wages hit 60% of PPP in week 17, so you're using 24-week forgiveness period, can you use wages during remaining 7 weeks for ERTC?
Yes, I will tell you this, that you can use the wages at any time during the covered period for employee retention tax credit. You can use those wages for the paid sick leave or the family leave credit. You just do not get to include those wages when you file for forgiveness. So the wages that you would put in that were for PPP forgiveness would be all the wages in the covered period minus what wages you used for those credits. But it's not a use PPP and then you get to use ERTC. It is, if you qualify for ERTC, you get to take advantage of it. The catch there, though, is just that when you put in for PPP forgiveness, you'll have to subtract it out. Right now, in this moment, as we understand it, there is some election that's required for the SBA to be aware of it. But if you're not filing for forgiveness right now, well, that doesn't matter. It's just by the time we file for forgiveness, the SBA needs to tell us how do we elect those wages out. But to be clear, you can use that compensation at any time. You just don't get to include it in your PPP forgiveness. What's up, Andrew? Andrew and I had a conversation yesterday. Good to see you, buddy. Thanks for coming on.
And that's it. And just FYI, it was only one question per person. So some of you asked like 3 or 4 questions. I just chose your very first one and we went with it just for time. So.
Okay. Well, hey, thank you all. I am going to put this video up. You can come back to this website to find a link to this video. I'll take down the link to the video that's there probably within the hour or two. We gave you a link to that. The video that's there right now is to the seminar on the 28th. I will most likely do a special seminar on the ERTC once the IRS updates their website, updates their form. But I don't think at this point we need to be waiting on the IRS because the rules are the same. We know we can file 7200. We know we can reflect it on the 941. We know we can file a 941X. We know all the rules. And quite frankly, like I said earlier, if you need to file it for first quarter, well, that's what it's there for. But hopefully we will see very quickly the IRS come out. But I've been saying that for a while now. So, all right. Well, hey, thanks to everybody. Greg, I appreciate you. And Mary Ann, thank you. And thanks for including my question. Let's see, Terry D, did we answer Terry D's question?
I don't see a question from her.
Okay, Terry D, throw it in there again. Thank you, Gene. I appreciate you. And CK, the CPA. And Maria from Cali. Appreciate you. And Casey, thank you so much. Appreciate you all. And if Terry D wants to throw it on there real quick, if she's able to. But Coach, thanks for being on. Coach's Pit Barbecue and Jane and Michelle and Sharice and CG, the CPA, Chris and Terry and Laura and Zoe's Kitchen. We've got Lexi there. And thank you so much, Rob, for everything, and Christy and Anna, Marianne, Tracy and Maria, Northern Dance, thank you so much, and Amy and Tony. What's up, Tony? Tony D. And we've got Cheryl. Okay, so Terry D is an S Corp owner, got little 2019 PPP because low salary but fixed in 2020. Can they get more on the first draw now? Yes. So they can go back and reapply, but I'll tell you this, it might be simpler if they got PPP already, don't reapply for PPP first draw. Go and apply for PPP second draw. Now, either one you get the higher of, but hear me on this. If you go and reapply for PPP first draw, they're going to say, well, here's what you qualify based on 2020 minus what you already got. Versus if you do second draw, you would be able to say, well, here's my 19, and they'd be able to get it based on that. So because they did the first one, let's see, they may not have the 25% decrease. You're right, Tony. Terry, sorry. Terry, you're right. So yes, they can go reapply. That's an example of how someone could reapply. Yeah, so thank you for clarifying the facts and circumstances on that. Appreciate you, Terry. Todd and Con and Han and Laura and Braden and Tarina and Valerie and Brooke and Michael G, what's up? And Alice and Herb and John. John, what's going on, my friend? And we got Robert of Philadelphia. Salon's great to see you. And let's see, Jeremy and Marty and Michael H and Linda M and Todd M. And we've got Alan, how are you? Lee and LaShawn AK. I think I hit everybody. Thank you so much for all the support. Tony D. Thank you all for being on. I really appreciate you. And we will see you soon. Find us on YouTube. We'll see you. Bye, Casey. Bye, Greg. We'll see you.